Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God. Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light.
Good morning, everybody. Oh, what's up, man? It's been a while, brother. Damn. Yo, how's your baby been? How's the family been? Man, it's been a while. Haven't talked to you in a while. But yeah, I hope everybody has had a safe week so far. As far as what we've been seeing, everything's been pretty much exactly how we've been thinking it was going to be, right? Retracement up to a particular level, gapped through the low, as I mentioned, well ahead of time. But yeah, so we'll see what happens. So yeah, looking at the news, we have PMI 645 AM Pacific Standard Time. So that should be fairly volatile. Should have some pretty exciting delivery. Tomorrow, obviously there's, let me see. Yeah, tomorrow we have part of the NFP announcement. Now we got Trump speaking. That should be interesting too. Then we got PMI, right? Another PMI, the final announcement for it. It's going to be definitely chaotic. Yeah, no worries, brother. I know you've got a lot on your plate with the new baby and managing your family and stuff. So you'll be back, right? I know you'll be back. And I'm here for you when you get back, right? But yeah, so we got NFP. It's gonna be pretty chaotic on Friday for sure. I probably won't be doing much trading on Friday. Maybe I'll do something on Thursday. Yeah, but after today, given the rules, right, and how we operate with NFP, FOMC, CPI, so on and so forth, rate announcements, Fed speeches like you see here, all those times require you to lower your risk. That doesn't mean that you're fearful. It doesn't mean that there's no opportunities that'll show up. It's just like how a soldier in a battlefield doesn't just run out into the middle of the battlefield just because they're trying to go take the enemy out, just because they feel like it. Strategically, we got to operate in different ways given different circumstances. We're at war here. Okay, as a trader, we're at war constantly with other people in the market, with ourselves, right? So we want to make sure we understand what the situation is and what the conditions, could present us with. And not every moment in the marketplace means you trade the same way. Not every moment in the market or every condition promotes us doing the same things over and over when it comes to risk exposure. So again, as a professional risk manager, because that's what we are as traders, as risk managers, we have to understand sometimes we have to operate a little bit differently. Okay? So this week is a beautiful example of that. Yesterday we called the market from Sunday up until today. Things have been pretty much doing exactly what we assumed they would be doing. Specifically for the indices, before we go dig through some of the other assets. Before this even took place, I said that there's likely going to be a gap that gets below the sell side. You could see that took place. If you go back and look at the Sunday call, you could see that I mentioned that. I said there's potentially going to be a gap, takes out the lows. Once it does that, it'll most likely retrace before it wants to probably continue to accelerate, right? If that is, what we see take place. You could see that itself, right? The retracement, the gap below, all those assumptions came to fruition, right? So the downside doesn't change unless something dramatic happens. We're still in a downtrend. For me to feel confident that there's going to be an extended buy-side delivery, we're going to have to break 3 PD arrays to the upside. Looking at it from this time frame, we have a fair value gap. We have these consecutive down candles. We have this one down candle that started the move higher that ran us up to the weekly fair value gap, which we were ahead of also. Just go back and watch some of the videos that I've posted since, last week, right? And even before last week, we were calling for the weekly fair value gap. There's also a volume imbalance in there to get attacked. And then once it got up there, depending on how it behaved, would determine whether we're going to continue. And it behaved beautifully. All throughout here, we've been navigating price accurately, right? And again, all you got to do is go watch the videos again. You don't have to take my word for it. You could just literally go watch what's been publicly shared. And my private community students definitely know the vibe. They've been here seeing it nonstop. But yeah, so, where we're at currently, I would have to see us break through this high for me to not feel like the market's going to go lower, right? So any retracement higher is just that. It's a retracement. I'm not looking for long-term buys. Tomorrow there's a heavy announcement when it comes to tariffs and different things that the U.S. economy is implementing. So that's going to have an impact, which none of us have been through. At least me, I've been here for almost 6 years now trading. And I haven't witnessed what the impact is from heavy tariffs and dramatic economic policy changes. So, this is a beautiful time for us all to gain experience and understand what that will do to the market. So if in the future something similar takes place, we'll kind of know what to expect regardless, because of the uncertainty, because of our rules when it comes to how do we navigate NFP, FOMC, so on and so forth. We have our risk lowered, right? We don't overtrade ever anyways, so that's not even a concern, and it shouldn't be a concern for you. If overtrading and overleveraging is something that you deal with, you're going to have to really think about what you're doing, because overtrading and overleveraging, no matter what will stop you from being successful. It'll take your ability to be successful away, and you don't want to have nonsense like that continuing in your trading. It's just, you don't want to do it. Because there's no news up until the 6:30 time, right? Because I'm on Pacific Standard Time, so it's 6:30 or 9:30 Eastern. Because there's no news ahead of that time, we're going to wait for the open to even consider any type of opportunities. 5:30, which is right now, generally, not generally, but as a whole, 5:30 is important because that's when the bond market opens. Okay? So, we want to make sure that we're on the chart looking at things around that time, which is right now. That's why we get on at 5:20, you know. So because there's no news, generally a rule I use is I don't look for opportunities ahead of the open if there's no news taking place near 5:30 or 8:30 Eastern. And that's because, you know, we can get caught in the manipulation. Anything ahead of the open price generally means that you're in manipulation, because just how Power 3 works and how price chooses to deliver, you could just see it in the chart. And if you get in and you get stopped out a lot and price goes in your direction, and you notice that a lot of your trades are before the 6:30 open or like the New York open price, you know, a lot of times you're getting wicked out inside of the manipulation. And if you're correct a lot of times overall with where the market's going to go, you might as well just try to make that adjustment, because it'll save you probably a lot of losing trades, and you know, it could start to minimize the amount of times that takes place. It's not like it'll always stop it, right? You could still get caught in the manipulation even after the 6:30. Sometimes it bleeds into the actual open sometimes. But, you know, it's just another one of those rules that can be very beneficial for some of you guys that get stopped out and then price goes in your direction. You know, just so consider that if that's a problem that you guys face, and you know, get some study with it, because it's very helpful. I see that this says 408 months. I don't know what the hell that says that for. It's kind of interesting. Yeah, that's very interesting how it says that. Say it for all of them. Oh, I think 480 minutes. Is that what that means? Yeah. Wow, that's weird. That's very weird. I'm looking at the thing down here. It says it doesn't say the months or like the minutes, or not minutes, but the hours. We're on the 4 hour and it says minutes. It's very interesting. Never noticed that. But yeah. What's up, Ski? Good morning. Good morning, everybody that's just hopping on. Yeah, I believe it's saying minutes, right? So 240 minutes. I'm not sure if is that even correct for 4 hours? 240 minutes? I don't even know. It's very strange. But yeah, so, you know, taking a look at what we see here, right? So as always, we start on the bonds and yields. We just went through the news and talked about a couple of different things in relation to risk and conditional awareness. But as far as what we see here with the bond yields, we're still rampaging to the downside. It's still held. I had this noted since Sunday. If it was to hold up here and continue to drop, it should be able to keep that intact. The weekly fair value gap up here has been respected. This is a monthly high. I think it's a current monthly high, right? Yeah. Or previous. This is from March. So we're starting a new month today. So you want to consider Power 3. Power 3 happens on every time frame. It even happens on the, excuse me, on the 1 hour, 4 hour. And so you can dissect it even on those time frames. But I say all that to say that, it's just that important, So you want to make sure you're considering that every time we start a new month. So because we are in now the month of April, something we also want to look at, seasonal tendencies. So let's go pull that up real quick. And again, there's no news happening right now until like 6:45, so closer to the open. So as a result of that, because there's no news, we want to assume that the beginning portion of things is going to be manipulation. It's going to be setting things up. Like the other day, I think yesterday, in my private community, we were navigating the manipulation of the daily range. Price ended up tanking aggressively but then it ended up running higher, right? And I don't believe there was no news at all yesterday. So yesterday was a beautiful example. Excuse me. It was a beautiful example of the pre-market open acting in a manipulative fashion, presenting us with the manipulation of the daily range. Okay, so I'm assuming that because there's no news today at 5:30 and it's later in the session, I'm assuming that that's probably going to be the case, right? Of course, it could do whatever the hell it wants to do, but I'm going to just assume that that's the case. So yeah, let's go to seasonality real quick so we can get a feel for... We can actually just honestly use something ICT shared with everybody, make it easy for everybody, right? So if we pull this up, right, you could see how April somewhat has a bullish seasonal tendency. March was somewhat of a consolidation. If we go back and look at what the month looks like for... Come over here. Let's see, where is it? So yeah, we could see that, of course it was kind of bearish or whatever, but nonetheless, the last 2 weeks are actually no, right? It dropped a little bit, right? Came down to a particular level, swept out some stops or whatever, but then it consolidated. You see how that happened? The last 2 weeks of, or the middle 2 weeks of the month of March ended up being a consolidation. So if we go back and we look at what ICT himself shared with us as like a overview using the Dow, because all the three indices are pretty much in sync for the most part. If we look at what the Dow, what ICT claims the Dow's seasonal tendencies are, we could see that March has somewhat of a consolidation. We could see that basically took effect in March, right, throughout the middle portion of the month of March. So it's very interesting how accurate seasonal tendencies are. So definitely take a screenshot of this if you haven't been through any type of study of seasonal tendencies, and just start walking forward with this. Of course, you want to go take the seasonal tendency chart that I have in my free community, and of course I have more in my private community, but the ones that I have in the free community, you can look at those and do your own study, right? You just go through what price is doing during each month based on the chart, and then go look at the last 10 years in the asset you trade, if you're using the indices, excuse me, and then just note what you see all three lines doing, right? Because there's 3 lines of time, and refer back to this to see if what you analyzed in the seasonal chart aligns with what ICT's assumptions are, right? And that's the thing. If you haven't studied this, you don't appreciate the accuracy that this gives you and the anticipatory skills this allows you to have. Because going into each month, if you understand seasonal tendencies and what it seasonally has done over the last 30 years, I mean, you have a good understanding of what it could do. And if the market promotes the idea that you're thinking of, or that you get off of the seasonal chart, right? If you see in the chart physically that it's promoting a seasonal tendency, then it's just one of those back end pieces of information that can really solidify your trust in a particular move based on what price has done in the past, because things repeat, right? And seasonal influences are like treasure maps. That's what ICT calls them, right? If you go back and look at some of the things he touches on in terms of seasonal influences, he literally calls it a treasure map. And he gives out his resource for it, which I'll let you go discover. I kind of have some of it as well, so maybe you can go take that from my free Discord. And of course, my private community has a lot that touches on this. But you'll see quickly, if you just do a quick study over the last 10 years and really look at it, it's extremely consistent. It's very, very, very consistent. And if it doesn't align with the seasonal tendency, that's also telling you something, right? But we're not going to get into too great of detail here. I've gotten into detail of it a couple times on my YouTube channel. In my private community, we definitely talk about a lot of fundamentals and stuff like that. But nonetheless, just simply going in and doing what I'm telling you to do, you'll be able to see for yourself without even just taking someone's advice. You'll be able to see for yourself just how accurate it is, right? Do the seasonal tendency have to be accurate? Or sometimes they might be. Yeah, so they don't have to be accurate, right? It depends on what's happening in the world, right? Sometimes there'll be a bullish seasonal tendency, but the overall sentiment in the marketplace is bearish, like what we see here. All that would mean is if we see a bullish seasonal tendency on a market that is clearly bearish, right? Like what we're seeing here, it's clearly been on a decline because of the economic changes going on. You can pretty much then switch your assumptions to, okay, bullish seasonal tendencies in this bearish trend are most likely going to promote a retracement or a consolidation moment in price, right? So that's another way that you can look at using seasonal tendencies and, using that tool. If you're in a bearish market overall, like in the actual market you're trading, and you see like a bullish seasonal tendency in a bearish market, you could think of the month that, like for example, April, you could think of April as a potential time where price may look to retrace against the downtrend, right? But that's all, you want to make sure you're not using this as a be all end all, right? It's just a reference to give you some anticipatory information. So then if things do align with whatever the seasonal influence is telling you, and you can align that with what's happening in the chart, it's just another one of those things that can help support your idea and build trust behind a particular idea. All right, so yeah, this is a very important topic. Again, I'm not going to get into too great of detail, but yeah, just, I have that resource if you want to get it and use it and start studying it. I have a video or two about it as well, but then of course you can just go into ICT's content and search up seasonal influences and do your own study there as well. And in my private community as well, right, I talk about it in great detail. So if you wanted to join that, that's always an option too. But yeah, so again, the seasonal influence for April shows that there's a bullish seasonal influence. So I wouldn't be surprised if we do get some kind of retracement. Preferably though, I want to see us stay below this. I don't think we're going to be bullish again until we get up here, because I need multiple PD arrays to be violated in order for me to adjust my narrative. Narrative doesn't change on a day-to-day basis. The narrative has been bearish for a while. And then of course we got a retracement. That retracement, because it held at the levels we wanted to see it hold from, obviously it's started its decline again. Presented a YouTube model here on the 8-hour chart. You could see, right, at a premium array, price retraced. You take this high to that low, got us up to a premium price level, swept out buy side, hit a weekly fair value gap, created a shift in market structure. There's a fair value gap here overlapping with another fair value gap, so that created a balanced price range. Price retraced back into it. This balanced price range is the reason why the upper portion of this fair value gap didn't get tapped into. And you can see that price delivered through all the way down to these targets, which again, we had all this outlined step by step in the moment, the whole entire time, weeks in advance. And then once it arose, we were able to talk about it in the moment as well. Again, you don't have to take my word for it. You can go in and see it being talked about. It's clearly there and public, So there's a lot to learn from those videos that we've done in the past from the last couple weeks. So I definitely encourage you to go look at those if you haven't already. Or, just keep showing up here when I do lives, and, you'll end up getting a very similar experience as well. But yeah, so again, in terms of what we see here, my downside narrative doesn't change unless this gets taken out. The run higher here, back down below this low, in my opinion, this whole upper portion of things is a balanced price range, right? There's a huge fair value gap in here, similar to the behavior that we saw in this area, right? How I mentioned it's a balanced price range and it respected it and left the portion open. I'm going to anticipate a very similar thing taking place here and continue for price to want to target the sell side. If we take this high to that low, we get a projection that gets us down deeper into these lower levels. We're in an overall downtrend obviously. So again, nothing changes in my mind unless something fully changes and invalidates things. And the invalidation process I use that's simple and highly effective. Again, you don't have to take my word for it. Just go watch how many times I've mentioned this and how often it plays out. But it has to do with 3 PD arrays opposed to the overall direction that price is headed in, right? In this case, we're going lower. So if we look 3 PD arrays above on this higher time frame, we have a potential bearish breaker here. Okay, there's a low, high, quick run below the low. So these consecutive down candles should hold, and price should use this upper portion as a balanced price range. And if it doesn't, and price just smashes through these levels, that means that a fair value gap's violated. That should hold us bearish if it's going to continue. That'd be a swing high that gets violated, and then a breaker that gets invalidated. So in that case, we would then look at buy side, right? Potentially these upper levels, and start to adjust our thinking if that was to take place. Because we see what we see here, and there's a chance for these levels to hold. Then obviously we're going to continue to trust that, because we're not going to trade against the waves that are taking place to the downside. Again, geopolitically, we have a lot of chaos taking place. There's a lot of uncertainty in the markets, and we don't know what the impact is going to be tomorrow with the tariffs and different adjustments that take place. Long term for the economy, it'll be good, but overall, short term, there's going to be some pain, as we have been seeing. Nia J, I'm not really sure what that means. Mark, and good morning. Oh, you're saying good morning to Mark. Okay, yeah, that makes sense. Good morning, by the way. I wish I could pronounce your username properly. I don't want to butcher it though, but good morning. Grateful to have all you guys here as well. Just a reminder too, if you guys get value from this the content I provide, or if you think that and if you know anybody that can get value from these videos and the things we do here, definitely invite some of your guys as friends. I would like to have a tight-knit community. Of course, anybody's welcome. And then, of course, like I said, if you get value from the content and you support what it is I do here, definitely like the video, subscribe to the channel if you haven't already. It's free, obviously, and I obviously do this stuff for free for you guys. And I want to provide value to you guys, and the way you guys can thank me, right, in the best possible way, is to show support to the channel, and invite anybody that you think can give value or add value to the conversation. Because the internet is filled, especially in this industry, with a bunch of idiots and predatory individuals. And if we can do our part, build a community that can also combat that, but also thrive with each other and help pull each other up. I think that is a, inspirational endeavor for us all to embark on. So yeah, again, I'm grateful for you guys hopping on, and so thank you. I appreciate y'all. If you guys got any questions, definitely let me know. We're ahead of the open price, so obviously at this moment, we'll just dig into some analysis, talk about some ideas, and answer questions up until obviously the open, because when the open takes place, we got to focus, right? So it'll be less likely that I'll get to your questions. Oh, okay. Thank you for clarifying that, Mark. Appreciate that. I was like, wait, am I reading something wrong? Oh, that's awesome. The more you know, right? Appreciate you clarifying that. Well, good morning, everybody, right? So yeah, if you guys got any questions, definitely let me know. I'm more than happy to help y'all clarify anything and whatnot. Again, the overall narrative, just to keep it very simple without even getting too deep into things, I still want to see price be bearish. The thing that would turn that off is if we get displacement through up to this high up here. And if we break outside of this daily fair value gap, right? If we get a strong displacement through that, in my opinion, will then present us with a balanced price range here up in this area. And if price was to stay above that, it would just continue to provide evidence, especially if we violate the high and we get a quick move away from that, above this fair value gap. I would assume that's creating a balanced price range. Just wanted to come back down and sweep this out. That would also be supported by the bullish seasonal tendency as well, like we just talked about. But again, if that doesn't take place, I think, given the overall geopolitical landscape and things that are taking place, I don't think we're done dropping, right? I really don't. And we have to see deep evidence that it's going to stop and it's going to rebound. Otherwise, it's going to keep falling. And you don't want to try to counter trend trade and force your opinion on something unless you obviously know what you're doing, And so your view, as is my view. Any rally up is setting up further sells. Okay, just like it's doing here. And again, this, in my opinion, should present a balanced price range, right? Because we went higher, declined. We've traded both sides. Been creating many balanced price ranges inside this up and down movement. And again, we have this fair value gap, overlapping large range candles. So again, things are going to have to be violated to the upside aggressively in order for me to switch my assumptions. Okay. So I just definitely encourage you guys to consider that as well. And so, yeah. And of course, like I mentioned, if we go from this high down to this low to get a projection, one of the projection levels is down here. So maybe this is going to be, where price wants to get to. I wouldn't be surprised if this rally we're seeing here, given the bullish seasonal tendency I just talked about, is all just being used to set up the high of the week if we do end up being bearish. This is what we want to see generally if we're going to be, in this case, anticipating a bearish move or a bearish week. We want price to run against us, because it's pulling against people's interest, and it's going to potentially set up somewhat of a premium for smart money to want to accumulate and then continue to try to drop price if that's what they want to continue to support. So far, nothing has disrespected that idea aside from the simple fact that there's an S&T here, right? That is one thing that goes against it. But given the overall landscape, I don't believe that's enough for us to think, just because there's an SMT, it's just going to change. SMT, if we're going to see a change in the overall direction, higher time frame wise, there has to be a change supporting that. We can't just see an SMT and just assume, okay, it's going to change, because that's just not how it works. It's not a be all end all. Just because you see SMT can happen on both sides of the marketplace. And if you don't know what you're doing with it and you just assume that because there's an SMT, it's going to respond away from that. In this case, there's a bullish SMT. To assume, given the fact that it's been so bearish, that this SMT is somehow going to be the reason it turns around, aside keeping in mind that there's all these things up here that we talked about, just assuming that this is going to turn in price just because we think it's going to, because SMT is there, it's ill-advised. And it's it'd be different if we have this SMT staying intact and then it starts to violate the fair value gap and these upper levels I mentioned. That would then start to really amplify our support for the fact that price may be using that SMT to turn around and give a more meaningful change in the state of delivery, right? So again, I will not consider price being overall bullish and get away from sell side delivery unless we get up into these levels meaningfully, not just like slow little grind up there. I need like a very crazy delivery through, breaking multiple PD arrays to the buy side while leaving the SMT at the lows intact, right? So if that doesn't take place, again, my assumption, my favor, right, whatever the direction that I'm favoring, is continuing to see price respect these upper levels, right? Thinking about this price delivery above us as a balanced price range. I want to see, something that supports that even further, which is, seeing this daily fair value gap midpoint not even get traded into, right? If it does that and then gives us a response, right, trades a little bit more or doesn't trade up there at all, that's just continuing to amplify my support for price going lower. That continues to amplify my support for a weekly bearish power 3. And that continues to support my idea of this retracement, which I assumed from Sunday, right? It's going to make me continue to assume that this is just pricing in the high of the week, which may end up resulting in us continuing to drop, probably target this low. So the fact that we have this huge wick here, If that is going to take place and price is going to short, which is what my assumption is and what I'm going to favor this morning, before it even gets down to this low or any of these lower levels, because this wick is so large and it's to the downside in line with this drop, each level in this wick, if you take a fib and break it down into quarters, becomes a target. All right? These are all early range targets that we can start to identify as if price is in fact going to continue to want to seek sell side delivery. Yeah, I've been seeing a lot about T-Trade saying nonsense about macros. I don't really get involved with people's drama. I know what works. I know for myself because, I got the answers on my own that macros do exist. They do deliver, and they are operated by me and a lot of other people continuously. So he may have his opinions, but this is a beautiful example of us being able to find answers on our own and validate whether someone's opinion is worth taking or not. I respect what he does. I don't have any animosity towards him, but at the same time, just because he's saying something doesn't mean it's fact. That's why it's very important in this industry for you to not just take people's word for things, for you to go in and identify things on your own, get the information and build an opinion of your own, because you can get pulled around in different people's worldview and miss something that is meaningful to you. Macros do exist. All you got to do is go look at the delivery and price during the macro times that have been mentioned, and you can quickly see that most of the time that's when price chooses to deliver or run towards a particular liquidity pool. Some people can't use them because they don't understand how to determine narrative and bias. Some people have different ways of viewing the market and different ways of engaging that don't require a macro. So because that may be the case, maybe that's why they may assume that macros don't work. Maybe the macro ideas don't align with the way that they trade, and that's totally fine. But they are there, and all you got to do is go do some research on it, look at the last 3 months or even the last 2 weeks, highlight the last 10 minutes and first 10 minutes of every hour, and you'll see. Generally, when price wants to move, it's going to move around those times, So I've been seeing a lot of stuff. I see a lot of crap on social media, a lot of people's opinions. And the best thing for you to do, right? I mean, you could consider what they say. But again, I always say too, don't just take my word for things. Take what I'm saying and go look at it. And that's how ICT's taught us to be. So we want to make sure we're really pressing into that because everyone's going to have their own opinions. And I'm taking ICT's advice in terms of what exists and what doesn't exist over someone that's been trading for, not even close to that amount of time. Again, there's nothing to take away from him. He's a spectacular trader. I've never seen him call the market live, but, he can have his opinions and he can live in his own opinions, and that's totally fine. But I want you to take this opportunity to acknowledge someone has a different opinion maybe, but go in and look at it on your own. And then, of course, you can see what I'm doing as well, and then just add that to your study, whether they exist or they don't exist, or whether they work or don't work. Does trendline liquidity exist? And apart from session liquidity and old highs, are there any other forms of liquidity? Yes, there are, right? So there's previous weeks highs and lows, previous months highs and lows, previous days highs and lows, previous session highs and lows, new week opening gaps, new day opening gaps, regular trading hours gaps, all that's liquidity. PD arrays themselves are a lot of times nested liquidity pools. What else? There's trendline liquidity is a form of liquidity because of the simple fact that retail sees them as liquidity, right? Retail puts their opinions around those levels, right? They assume that because price has higher highs and higher lows, there's going to be liquidity there. So they put entries there based on their belief as far as what price should do around those levels. So that's why trendline liquidity is trendline liquidity, because there's an assumption that there's orders there, and there's an assumption of a specific behavior that takes place around those levels. So people place their money around those levels. So as a result of that, there's liquidity there, right? Above old highs and above old lows. There's an assumption that each of those will act as either support or resistance, or a safe level to place your stop. So people will place their stop losses there, right? So in turn, that creates liquidity, right? So there's liquidity in probably at every single price level in the marketplace, to be so honest. But of course, there's certain ones that we highlight that are regularly attacked because of human psychology and just the overall common knowledge, supposedly, in the marketplace, right? So trendline liquidity exists only because there's logic placed behind that idea, and a lot of times that idea is weaponized, which you could clearly see taking place in a lot of ways. Then of course you can't disregard equal highs, equal lows, because a lot of times smooth edges like to be made jagged, like you saw here, right? Had equal lows down here, it went all the way up here to set smart money up with willing buyers, just to position them on the opposing side of their trade, so they can then drop price and start taking profits and target these equal lows that people probably assumed was strong support, right? It's bouncing around a level here, right? Oh, there's a big figure, right? 19,500, right? Or 19,600, and look at the support level right at that level, right? So people's assumptions, probably saw that, and then little do they know there's people like us in the market trying to be predators to them and weaponize their retail logic and our understanding of where liquidity is at, so then we can also pair our orders against them. And you could see it played out pretty nice. Again, this was all done ahead of time. I framed this whole entire move from the consolidation, breaking out to go higher, where it would stop at, and then once it delivered, where we would enter. Walked it all the way down, all the way up until yesterday in my private community, and obviously here, right? Been doing a lot of live calls lately too. So I appreciate your question, Mark. Appreciate you. Morning, Tony. Glad you made it. And so again, if you guys do get value, right, a way to thank you, like a way to say thank you to me and support the channel is definitely to like the video. I know that when I watch videos, I always forget, so I definitely like to remind you guys that do support the channel, that do appreciate the things that we do here. It really helps the channel out. It helps students just like you see these pieces of content and these live calls. It tells YouTube that it's worthwhile for people to hop on. And so I greatly appreciate you guys taking it upon yourself to go and do that for me, right? It's really appreciated, because the whole goal of these videos is to help people, and if people don't see it, obviously I can't help people, right? And so you help me by simply doing the free stuff, like liking the video, and even telling your friends, right? Like if you guys invite your friends that you think can add value to the conversation, that's much appreciated too, because it'll just make this community more and more and more valuable to traders just like you guys, and then of course I get asked more questions, and the more questions I get, the more I understand my audience and their needs, so that turns me into a better mentor, so I can serve you guys the best, because again, that's the goal. I want to help you guys succeed, right? Or get you guys on the pathway and get you guys the answers, so then you can be on the pathway to be successful, And again, there's a lot of nonsense on social media, and I can't stand half these people that continuously spew a bunch of nonsense and hurt people. I was hurt by idiots on social media believing their lies. So as a result, it inspired me, once I figured out what to do and how to do this properly, it inspired me, because of the pain I went through, to go ahead and try to participate in sharing realities. You know what I mean? So I greatly appreciate you guys for supporting me. And again, if you liked the video, it's a great way to thank me for the content and the time that I share with you guys. So again, so do you guys have any extra questions or anything before 6:30 comes? I want to make sure. Yeah, it's unfortunate. See, I know about a lot of the drama and stuff like that, but at the same time, you got to think like, it may be entertaining to entertain some of that stuff, but it doesn't help us, It doesn't help our thinking. And for new traders, idiots like that guy that you just mentioned, not even going to say his name, But people like that have clearly never even attempted to learn in any meaningful way the concepts that we know work. Their opinion, when they get traction from hating and just talking down about things that they don't even clearly understand, it just discourages people that want to look into this stuff, and it's unfortunate because maybe people are struggling and then they come across ICT's content, but then they hear all these people hating and they don't even give it a chance because of someone else's opinion. It goes back to what I was saying earlier about T-Trades, right? Again, there's nothing against him. He's a pretty intelligent individual. But just because someone says some controversial stuff, it may just be something to do marketing. Because that's ICT's whole, chaotic persona. It was all done on purpose, to get people to come and look so he can have free marketing. Controversy is something that is like one of the best tools to gain traction, because people, if you start attacking people and, they want to go and fight you, right? Or protect themselves or stand up for whatever it is they're trying to stand up for, it'll make them come argue. And where there's smoke, there's fire. So people want to go and see. Like right now, we're talking about these two individuals because of their controversy. Otherwise, wouldn't be talking about them, So you could see right there the strategic element to controversy in terms of marketing. A lot of people do it, and I just think it's a distraction, right? But again, you want to look past controversy and see value that people provide, because a lot of times the controversy is from marketing. You know what I mean? And I'm not saying that there's anything wrong with that. It's really intelligent to do some stuff like that at the end of the day, because you don't have to pay for any marketing, But again, you don't want to be distracted and miss critical things because of controversy, or you don't want to discount someone because of their controversial situations. Because again, a lot of times they have value and they want to stir up the pot, right? And being controversial is a wonderful way to stir the pot up, And sometimes facts, like idiots trying to lie to people on social media, and majority of people are liars. Sometimes facts are controversial. Sometimes, the truth hurts, and that can also create smoke, right? And again, where there's smoke, there's fire, right? Most of them use their heads as, yeah, a lot of people have, it's unfortunate that people, they get obsessed with attention, and then controversy gets most attention. So sometimes they attack things, and most people don't understand the psychological, strategic ways of controversy, and how that stuff's used. So a lot of people take things like at face value as truth when it comes to controversy, and again, it steers people away from good information a lot of times. It's unfortunate. So again, you want to be aware of this stuff, because if you're not, you can fall victim to strategic controversy that's being used to pull a crowd. And most people get distracted by the controversy, so they don't even look into things like this because they heard this or heard that. It just goes back to what I was saying about T-Trades earlier, and anyone that's stirring up controversy. You want to make sure you get your own opinion. I don't stir up controversy. I don't lie just to get attention. And I won't be doing that because it's not the goal. I don't really give a shit, to be honest. I just show the facts, what works for me, and provide value. And if it works for you and you can take things from it, so be it. I have no interest in drama. I really don't care, because attention is not something I seek. Helping individuals is something I seek. And I'd rather get the attention through your guys' word of mouth, your guys' good experiences over here. I just feel like that's more of my way of doing things. Someone comes at me, though, they're about to get a mouthful. So it is what it is. Because I do feel like I'm above average, you could say. Not to toot my own horn, but I let the charts do the speaking. I don't even got to show majority of the things these people try to show to get attention. I could just show you that I can call the market and you can make your own assumptions, you know. So yeah, it's how it really should be, to be honest. But hey, to each his own. What's up, Byron, bro? What's up, brother? Shit. All right, so yeah, it's 610. So yeah, just let's actually fly through some of these assets. So we could see that the overall yield markets have definitely given somewhat of a decline. Again, I talked about this being in a consolidation. So the only way that I'm going to be able to commit to one side or another when it comes to this asset class, it seems as though it wants to favor downside. That would support weak dollar. But again, we have April 2nd coming and there's going to be some chaotic stuff taking place. So we don't know exactly what the overall assumption is going to be, what the behavior is going to be after tomorrow. Again, it's the start of the month. So we can expect the monthly range to present us with a manipulative behavior, you know, because power 3 is on the monthly, it's on the weekly, it's on the daily, 4 hour, 1 hour, so on and so forth. But the higher time frame navigation of power 3 is very important when it comes to narrative, because it keeps you in tune with what's potentially taking place in front of us, right? So this declining also would support, if it does commit to that, it does support strong indices and strong foreign currencies. So if we were to see this decline and we were to see the bonds continue to rally as they are, we may have seen a quarterly shift here, by the way. We'll see as things roll out to start the rest of this month, or this first start of this month. But if this continues and goes higher and the yields break lower and it starts to show that that's something significant that's going to continue to take place, like maybe breaking this low, for example, maybe breaks below this fair value gap and uses it as resistance, with the bonds going higher. If we can see the DXY drop as a result of that, that would all support, you know, this potentially turning around. And that on the back end, if we were to violate the swing high I mentioned earlier as my line in the sand, if all that stuff was to take place and we get above this high, that supports an overall adjustment, a change in trend, and possibly a bullish quarterly shift taking place inside the indices. But again, unless that takes place, I'm going to continue to justify continued downside delivery, because that has not changed. And narrative doesn't change just because we feel like, you know, we want to see it change. You know, and it has SMT. No, the SMT and the change in the state of overall narrative or the delivery has to be supported by a layering amount of things, right? Some of the things I just mentioned. But if you know, like if you look at things currently with the indices going lower and the bonds going higher, that's a crack in correlation. Okay. Why is it cracked in correlation? Why are things not being as clear as we would want them to be in terms of correlation? Because the economic policies in the United States right now are really getting shaken up. So the uncertainty in the market is being felt, right? Things are not knowing what to do, right? Obviously, those of you that have been with me for the last couple of weeks, throughout the last month, you've seen that even with some stuff being a little shaky, we've still been able to pull out ideas on a daily basis. We've had like one day where there was an overall red day in the last 2 months. And again, you don't got to take my word for it. I'm not just sitting here trying to blow smoke up your ass. Okay, you just go look at the videos. I do them publicly on purpose so you can see it. And my private community students, they also, some of them are here on the live call right now. They'd be in the chat blowing me up saying I'm a fraud, I'm a liar, he's lying, he doesn't know what he's talking about. So, there's enough people to come out and justify if I was lying or not, right? They'd be like, oh, they'd be able to call it out very effectively. And they'd be open to do so if I was lying and not being truthful about the things that I tell you guys. And yeah, right. So trust and believe you're in good hands. I'm not one to stir up controversy, like I said, and I'm not one to sit here and say a bunch of nonsense, and I prove that this stuff works. So you can rest assured that you're not wasting your time. And again, your time is very valuable to me. And, so I thank you guys. And the least I could do is give you guys value that can get you moving forward, because that's the purpose of why I'm here. I could just be in my private community. I could just be off social media, which eventually may take place. But I know there's people that need help, right? And it is fulfilling to me to help people and, watch people succeed, aside from myself, so some of the reasons why I'm here, right? So, but yeah, so going back to what we see again, this is cracking correlation. So we'll see if that wants to continue. Again, the uncertainty in the market is why the risk on, risk off relationship with the bonds and yields versus the other assets is kind of cracked. Maybe that gets fixed as we see the response from tomorrow's adjustments in the overall delivery or overall financial adjustments in the economy in America. We'll see what takes place, obviously. But for now, based on what we see technically, it seems as though the currencies are wanting to dig lower. That's being supported by the possibility of the DXY continuing to want to march higher. We've been saying that if price is going to respect these lower levels, we may see price want to continue to run higher. Now, the overall adjustment in narrative for DXY, going from bearish to bullish, for me, because of all the uncertainty and chaos taking place, I would like to see us support a run through the highs up here, breaking through all this likelihood of going lower, that being the breaker, the bearish order block I have highlighted here. This small balanced price range. Why is it a balanced price range? Because there's a huge down wick, right, that ended up running higher and closing, layered with this down fair value gap, right, overlapping that entire wick, right? So generally that would act as a balanced price range and hold price if it was going to go lower. Because we don't see that taking place, and we're also really contesting this bearish breaker, which should in itself also be a balanced price range, right? The down delivery, higher delivery, price trading through it. It should have no reason to want to break through the breaker candle if it's going to continue to go lower, because the breaker candle generally presents a balanced price range. That's why it stops there and doesn't have to dig too deep into it. That's also why if it digs too deep into it, it becomes a problem. And a lot of times it fails if the midpoint is violated, right? So layering these things together, if price can get up above here, we have a pretty strong indication that, price is going to want to seek higher prices. And then if price was to violate this up here, I'm pretty confident that overall things may not start to sell off unless, of course, we get another displacement back to the downside. DXY continuing to go higher. If we can continue to see this area hold in price, if this daily bearish order block 50% level you see here is violated, if we aggressively smash through this high, creating a shift in market structure with all this stuff behind us, if that continues to march higher, that supports us continuing to drop, which again is what I'm favoring, even with some of the cracks and correlation we see between these other assets we like to study, right? So we keep these conditions we see in the bonds and yields in mind, unless things want to kick back in line when it comes to these other assets. But for now, I'm still going to assume that currencies are looking like they want to drop. If DXY is going higher, that supports that idea, and of course that also would support us continuing to favor downside delivery here in the indices as a result of that analysis. All right, so yeah, I hope all that is clear. So again, right, everything that we've wanted to see that supports the attack to the downside continuing is taking place from the gap below, because we were so close, right? Again, that's something I called out ahead of time, to the retracement, which I also called out ahead of time. Okay, I called out live yesterday in my private community and then also on Sunday that if we gap below and take the low, it'll probably want to retrace first before it wants to give us another meaningful delivery, if it does choose to want to deliver to the downside, right? Again, we are during NFP week, right? We are at the beginning of a month. So if we end up having a bearish month next month, or this current month, I wouldn't be surprised if we do try to contest a little bit of the buy side and try to get us up into here and maybe set up, sweeps of liquidity to the buy side. But again, I wouldn't really want to see, if we're going to continue to watch price march lower, I don't want to see us get too deep, because if we get too deep and start breaking these levels I have mentioned, right? the breaker here, the fair value gap, and then this swing high, this swing high getting violated, or even us getting through this overall fair value gap here on the daily with the Nasdaq, right? Even with us getting up above there, I would start to assume that we may want to reach higher, because this large daily fair value gap, okay, consider this, right? This large fair value gap here, if it gets another run through that overlaps that whole thing, something like, this candle, if we get something like that taking place, this could end up turning into a bullish balanced price range. Because similar to how it was over here with the overlapping fair value gap, creating that as a balanced price range, similar to how that took place here, and see how it delivered that from there. That same similar thing would take place here if it does a big run to the buy side through the fair value gap and doesn't show any respect to it. Because currently right now what we see and what we're anticipating is the upper portion of this fair value gap being respected because of the possible breaker that's here, which is clearly we're able to identify, the overall downtrend, and then of course the fair value gap that's coupled with this, right? We shouldn't see the midpoint of this daily fair value gap get violated. As I say here, it should not come back to the consequent encroachment of this level. And this overall bearish candle here creates a breaker for us to identify. You can make an argument that these consecutive down candles could be potentially used. But I'm going to just go with the last down candle here. Right? So preferably I'd like to see that hold in conjunction with the daily fair value gap midpoint. And then if we go to the weekly chart, right? Let's take a glance there too. We also have, like I mentioned earlier, on this weekly chart, we also have this wick phenomenon overlapping multiple candles. So we can also use the midpoint of this down wick here that overlaps all this price delivery. The midpoint of that can end up acting as a premium array that should be able to hold price if we're going to continue to go lower and maybe target this wick, right? And some of the quadrant levels inside that range, right? So yeah, I hope all that makes crystal clear sense. And, the opinion I'm having, right, as far as us favoring downside, I hope all that makes sense and why I believe that. So you don't have to just take my word for it, and you can start to understand, why I'm saying some of these things and why certain areas should hold. What would invalidate the idea for us being bearish. And yeah, right. So that's pretty much all my assumptions and ideas as far as what I want to see in price. I would prefer, given the fact that we broke outside of this particular range here, classifying as a balanced price range, I would assume that if we break outside of this, it's definitely going to confirm our run higher. And that, again, would support the overall downside delivery taking place in the indices, okay? And that would support this run higher here just pretty much being a high of the week getting priced in. And if we can get a displacement that gets us back down towards the lows, we can get in line with that and feel pretty confident in price wanting to, continue to attack sell side. Right, so we'll see if all that continues to be justified as a result, right? And again, if we look at this time frame here, what I can tell you is that if we do end up breaking outside of this daily fair value gap here, right? If it does end up violating the levels I've mentioned, and we do get up above this high here, this consolidation, right? The accumulation in here, reaccumulation, breaking out above here would then put me in a position to believe that this is actually a market maker buy model. And of course, I want to wait because of what the higher time frame is saying. I don't want to just assume because I see this as on this time frame potentially a market maker buy model. We're still inside a downside narrative. But as far as a contingency plan is concerned, right? If I was to see price get up above here and start really rampaging through this fair value gap, that's a framework that we could then use to adjust from bearish to bullish, and again start to feel more confident in that adjustment, right? Aside from just trying to force our will because we see price give a small displacement to the buy side, and the SMTs at the lows, right? Us getting up here, right, with that SMT I mentioned on the 3 indices, if that was to stay intact, and price was to get up above in this level, right? This high is what I mentioned as a line in the sand for overall higher time frame bearishness. If we were to get up into this level, right, and start to see justification of that, again, that would also start to justify even further that the SMT we see here on this higher time frame, it would justify that being valid, right? But again, none of that is in play right now. That's just the contingency or opposing view if that was to start to kick in alignment. But of course, unless that is proven, we're going to continue to favor shorts. This run above the high here, I'm going to take as a run on stops. We do have SMT at the highs here. And if you go to even like these higher time frames, we can also see that the fair value gap in here, it's also not even being traded into, right? And there's also that bearish breaker, the down wick coupled with the fair value gap here. So again, we'll see if that's going to support this SMT, basically highlighting this as a potential balanced price range too, to support delivery down to the lows again. Basically, if that takes place, it's going to take these lows out, and then it'll justify this being invalid. For now, I'm not going to hold any weight on this SMT pushing price higher. The SMT here has already given us a pretty decent response, setting up a retracement in a downtrend. So again, we're going to continue to support that idea and see all these runs higher, see the SMT at the highs here as more significant for downside delivery, unless, of course, that changes, which it hasn't. So we're going to keep pressing for the idea to go lower. Okay. So yeah, let's see what the open price does for us. We'll see if there's anything that can be reasonably engaged or framed out. But yeah, we're going to wait for the open to take place. Whatever happens at the open, we're going to use to try to frame things out. If we go to, let's go back to the indices now. So I'm going to keep DXY up. So yeah, I hope all this stuff has been helpful to you guys. I hope it's made sense. If you have any questions or anything, just DM me, put comments, right? Because if I know where you guys are at, I'll know what to talk about in more detail. Otherwise, I'll just start talking from my own opinion and, what I see in price, assuming that everybody knows. And, I want to make sure that you guys can follow along effectively, so you can play a huge role in helping me do that, or achieve that, right? So yeah, so we've gotten through this fair value gap here with the GBP. So again, we have this large fair value gap. It's traded through it, but now it's gotten right back down below it. I believe there's SMT at the highs here, if I'm not mistaken. There's SMT here in the currencies, and that's kind of resulting in price retracing. Again, price has went higher. This large wick here on this weekly time frame, not wick, but the large fair value gap coupled with this other large fair value gap, this, if it gets violated through, it's going to show evidence that we'll probably want to take a deeper dive to the sell side. Otherwise, this again should act as a balanced price range and continue to hold price going higher, and it should sweep the lows here. But we're not going to know for sure if that's going to be the case, and if it's going to continue to go higher until we see what the response is going to be from this level. It's a fair value gap, so retracing into that to maybe give a move higher from there would make sense. It has been in consolidation, so it's been a very high resistance environment for the currencies, at least for the GBP USD. It has had interest to go higher. So we'll see if that's going to continue, right? But again, if this does look to decline and DXY is going to look to rally and continues to hold these levels in here and then maybe even reach for the high, that's going to support currencies going lower, and our assumption in the indices going lower should remain intact. Right? I'm going to assume that that's going to continue to be the case given what we see so far, and base my ideas around that, again, until proven otherwise, So yeah. So we see SMT here, like I mentioned earlier. I already have it labeled. So there's SMT up there. Prices rallied up. Okay. So if you think of bearish power 3, right? So it's consolidation. Manipulation has now gotten above. We have SMT at a higher time frame PD array above us, being that daily fair value gap. For the weekly range, it looks like bearish power 3 dynamics are in play. The first two stages, consolidation, manipulation, against the downtrend are for sure in place, right? And then of course the higher time frame daily looks like it's in line as well. So I'm going to assume again that we're going to try to target sell side until, price proves otherwise. There's some very small regular trading hours gaps. That's what this indicator is showing. So it's a very small range for the regular trading hours. Go see. Not too sure why it's not showing here. Oh, there we go. All right, so yeah, we have relative equal lows down here. So again, our assumption is that downside is going to be continued. And I don't see anything giving us evidence for anything else for the opposing view. So we're going to continue to justify the downside. I kind of like what we've done here, right? We've already kind of taken out stops. This up movement, price getting aggressively below this. I believe this could be showing us a bearish breaker. There's SMT at the highs. So we may see this delivery take place here from this fair value gap and go lower. These are potentially going to be used as a low resistance liquidity run, right? There's a failure swing there. It's in a downtrend still. DXY is still running higher. This right here could be a 1 hour YouTube model to short. So let's see if that's going to stay intact with SMT at the highs backing it up as well. So yeah, we'll see if that's something that is going to be worthwhile here. I don't take trades early in the open session, like right at 6:30, because we want to wait. We want to let price play out a little bit, because you never know what can take place at the open. They can whipsaw everybody around, stop you out, then go in the intended direction. So it's probably best to wait till 20 minutes pass, or just wait till we get into the macro, right? That's 20 minutes beyond the open. Just let price speak, especially on NFP week. We don't want to slam our assumptions when we know that price could be a little more manipulative. It could be setting things up to actually intentionally hurt people, which it generally does. Right, so yeah, in pretty much every call, I highlight patience. You don't want to feel like you miss a move, because even if you do miss a move, hypothetically, there's still chances to get into continuation variations, of your same model, right? This stuff happens over and over. And, just because you miss one move doesn't mean that there won't be another good move, especially given the macros, right? I don't care who says they don't exist. They do exist, and you can go look and see for yourself. Right? So yeah, I'm going to just continue to watch what the behavior is going to be here. We have news at 6:45. So I am interested in seeing what that's going to present us with. We did see a run on highs here. If price was to, in my opinion, get down below the low that was just created, right? We came back up and purged highs one more time. So if it was to get back below this low here, this creates a bearish breaker. Okay. So this up candle, or this down candle, my bad. That right here is a bearish breaker. Okay. So, and it's respecting the regular trading hours gap. Let's see if we could stay below that. And we're also inside that 1 hour fair value gap I just mentioned. So this is a bearish breaker inside of a downtrend, coupled with the 1 hour fair value gap that I talked about a second ago. Also, it's presenting a 1 hour potential YouTube model, right? This run on stops up here. SMT at the highs, shifted market structure, right? So this could be a pretty decent framework for a short if it is going to continue to favor downside. You can kind of make the argument as well with this, but again, the narrative higher time frame wise is bearish, right? So this would be a little more risky because there's not enough evidence to show that long term things have changed from bearish to bullish. So this is less supported by me because of the higher time frame narrative. Higher time frame's king, right? What the daily and weekly chart are doing are more important in my opinion. That's just the way it is, right? So yeah, I'm going to look to see if I can engage a small entry down in here using this as a bearish breaker. Stop would go above the breaker candle. Again, it's before the open price or the news comes out. So, makes this a little bit more risky. But at the same time, we'll see what happens. The opportunity has arisen so far. It's presented itself there. So I'm going to put a small entry in there and we'll see what plays out. So again, this is not financial advice. You do things on your own accord. Wins and losses are your responsibility. Take the disclaimer seriously because it is what it is. All right, so let's see what happens here, right? If this is going to be able to deliver at this moment, we are very close to the open. So it's, again, higher risk. But if it was to stop this one out, the next idea we would look for or consider would have to be further in the session, closer to the macro, maybe even all the way to the 7 o'clock time, silver bullet. And so yeah, let's observe and see if this will play out for us. So yeah, the reason this is kind of an interesting idea is because of the higher time frame framing that I just mentioned too. I like what we see on the 1 hour, right? This here is a 1 hour YouTube model. So not only has it been in a downtrend overall, we also see this as a higher time frame 1 hour YouTube model. We got relative equal lows. We're in a downtrend overall in the higher time frame. And my target is simply down here, right, to these lows. I don't need to get 5,000 points. All I need to do is, see if I can engage a move that can take us down to reasonable, 20, 30 points. And once I get that, because it's NFP, that's all I'm aiming for. I'm not really concerned about trying to do too much. And, it is what it is. You should consider having that same mindset, not demanding too much from weeks like this. But yeah. New day opening gap. Oh yeah, you mentioned a new day opening gap. I haven't even had a chance to pull that up. Probably should go pull that up real quick. So yeah, we will see what takes place here. So yeah, I hope the framework and things that are supporting this idea potentially doing what I wanted to do and seeing price go lower, I hope that it makes sense as far as why I would assume that. We layered it from higher time frame, daily fair value gap up here. Then we got the 1 hour potential YouTube model that I just outlined, and then we shrunk all the way down to that lower time frame, and within the context of the macro, or in the context of the kill zone, we're able to then try to get up into the breaker that could potentially be taking place right now. Right, so yeah. DXY is still moving higher. We still have pretty strong delivery here. Right, it's kind of contesting it a bit. We have this down wick overlapping this candle here, so we'll see if that can hold in price. Mind you, this is what the breaker on that 1 minute looks like from this time, or was it from the 1 minute? Yeah, the breaker here, this potential area. I'm watching to see if it holds. is a down wick on this 2 minute, right? It's a pretty strong down wick too. So yeah, let's see what happens here. So it's pulling against the move a little more than I would like. Right, so we would definitely want to see us start to deliver away. It may want to wait for the macro, right? So, we'll see if that delivery from that 1 hour area, because this 1 hour area here, how it pushed away had me believing that, okay, maybe it's reasonable to watch price move pretty much like within the next couple minutes. Right, but now that we're kind of pulling back, we got this wick here. Let's see if we can respect the midpoint of that, because that's a good sign if it does. If it was to blow past that, obviously the whole move would be disregarded till the next potential macro. Yeah, NQ, very wicky. It's very, very much more volatile than like the S&P and the other stuff. So you gotta be very careful. So yeah, that stopped me out. So that move basically ended up in a stop out. Right, so let me pull that up for y'all. Just to show y'all what just took place. So wanted to take the entry inside that little breaker area, which was also lining up with a new week opening gap low. Okay, the entry was there. Here, let me pull up this too to show y'all. So this here is one of my live accounts. Okay, live account, and that entry ended up in a loss. Again, we're still supporting the move going lower here. It's just, we got the open price manipulation taking place. So just because this loss took place here, I don't give a shit. Okay, I'm still going to believe, given what we see here, unless proven otherwise, and it gets maybe above this fair value gap I mentioned on the 1 hour, I'm going to still trust that this is going to go lower. That doesn't mean that I'm going to throw an entry in right now, right after I took a loss. I want to wait now, right? Are you going to provide me with an entry, Nasdaq? Right? I'm not in a rush to try and get this back. I could care less. Okay? It is what it is. Losses happen. And, we can't take every engagement as a life or death situation. Like, oh, this loss took place, so my career's over now. No, it's not. Oh, this loss took place, and I'm going to disregard my bias. No, you are not. Okay? Unless you're really proven otherwise, you stick to your narrative. We trust the higher time frame. It's just this transaction paid tuition. This transaction gave me information to tell me that we're not ready to drop just yet, right? Or maybe it just wants to decline up in here a little bit. Retrace higher a little bit to test the 1 hour fair value gap one more time, right? So if we can get down below this low here, I'll use these consecutive up candles as an order block to position myself in, right? We're closer to the macro as well. So that may be a better option. Yes, the risk or the precision entry is a little bit away from where I wanted to engage. But it's all right, and since I took a loss, I dropped my risk by half. My risk is already cut in half, right? So 50% of the 1% that I normally do. So it was like a 0.5% that was lost there. So now my next trade is going to be risking 0.25%, okay? And only way I can move it back to a full 0.5% risk is when I make back what I just lost, or when I make back half of what I just lost. I hope I didn't confuse y'all right there. But that's the process in terms of mitigation, right? That's how I operate when it comes to fixing issues. But again, my narrative has not changed. We are just going to now wait for time to kick back in alignment, that time being the macro. And we'll see what price wants to do around that time. Okay, all the framework I've laid out has to do with me favoring shorts. And, if it turns around and proves that we're wrong, it is what it is. At this moment, this does not make me feel like it's going to be changed anytime soon. unless the news comes out and changes that in 1 minute and completely just attacks the buy side. We're going to stick to what we've been assuming so far. So yeah, let's now wait and see what this response is going to be. I like how we've been behaving from this 1 hour fair value gap. I really like that. So yeah, let's put that down here again. So let's see if we can start to see some interest to push us to the downside. Again, we're framing off this higher time frame daily. We drop down to that 1 hour, right? We could see that we're potentially setting up a 1 hour YouTube model. And we're going to assume that this, this area up here is going to hold. It's okay for them to want to try to push back into this. It's totally fine. This is my framework time frame. So I'm framing it here. So if I can catch an entry somewhere in here, that'd be great, right? Like this is a 1 hour candle. We're running higher, right? The hour is about to be created, right? A new hour. So we'll see if this candle is just manipulating this range here to get us up into here on this 1 hour inside that bearish higher time frame daily chart. And then maybe that can set us up in here, right? And then deliver us to the downside. We have this run higher here. It should hopefully be able to leave a portion of this open. We've already had delivery through buy side, took stops, aggressive run lower here. So hopefully the midpoint of this fair value gap can hold price. Preferably that's what I would like to see. So yeah, let's see if we can get that to take place. It's also the midpoint. It's very ironic. The midpoint of that is also in alignment with that 1 hour fair value gap, or the 1 hour fair value gap midpoint is in alignment with that daily low of the fair value gap. We have left equal lows down here, so that's a good thing for us to see if we are going to look to short, if it supports that. We're 3 minutes into the macro. So let's see. So now we just took out a 1 minute high. Don't lose sight of what we see here on this 1 hour, okay? We're going to drop down to the 5 minute. So we can see relative equal lows here. Let me actually remove this real quick. I don't think I like that. Maybe I'll keep Asia. I'd say that looks a lot more clean, right? So yeah, let's actually flip through. So, okay, we see an SMT here. So that's kind of making it difficult for price to want to go lower. So yeah, we'll see if this wants to continue. Again, if that continues, we have our contingency plan to adjust. But if this does look to want to run higher, I am going to be even more patient and wait even longer, because we're not just going to flip-flop just because. We need to see more evidence. All right, so SMT's at that low. The SMT at the high up here is being really, really strongly contested. Now, this 1 hour fair value gap is being aggressively traded through. I don't like to see this. If it breaks out of this 1 hour fair value gap range, like if it can't close inside this, this may end up being a red flag for us to want to see shorts, unless it was to get back down below it. Because this large fair value gap on the 1 hour being completely overlapped to the buy side here and then trading outside of it may lead to this ending up being a balanced price range. And then of course if that's the case, I'm going to need more evidence breaking through that. If I'm going to look to trade a short today, right? It may not offer the short today if that takes place. And it may look to want to dig a little deeper. We still have all the way up until the midpoint of this daily fair value gap for price to reach up into, right? So that is a possibility. And, simply if that's the case, given the fact that one loss was taken from me personally already, I'm going to demand more from price, especially because it's NFP week. Not every single day is going to be a day where you throw a bunch of entry. You should never just toss entries in because you feel like it, right? You want to let price explain the story to you. Keep track of the fair value gaps and how price is using them. Keep track of the intermarket relationships, and look at how price is delivering in this 1 hour fair value gap. If we could continue this and stay below it, if we can get back down below that fair value gap, that's a good sign for us to then continue to target shorts down there, right? We still have an SMT at the highs here supporting bearishness continuing still. Price is just now manipulated higher. Let's see if that can start to provide evidence for us to want to go lower, right? Again, there is a risk of it wanting to run a little deeper into the fair value gap. I'm assuming that most likely won't take place. Why would I assume that? Because we have this SMT here, right? And we're inside of a downside narrative still, So it's the start of the new month, right? So there's a risk of going against the previous narrative, right? And if that's going to take place, so be it, right? We don't overtrade or over leverage over here, and we don't obsess over the next entry, right? Because the next entry won't change your life. But if you think it will, that thought process is going to make you overtrade. Because if you take a loss with that mindset, you're going to think, oh, I got to make it back because that previous loss was supposed to take my life to another level. It was supposed to change everything off that one event. When one event's not going to do anything for you. Trading's a long-term, slow grind to the top type of endeavor. So, you want to look at a set of trades, your performance on a weekly basis, then make assumptions in terms of reflecting on your performance, right? Let me see chats. All right. So yeah, given the framework I just outlined with the 1 hour fair value gap, looking for that to hold, I'm going to continue to see if that's going to take place. It's already kind of skeptical because it's already blown so deeply into that fair value gap. I would have preferred to see that hold quickly, and I don't really want to see us spend too much time in this fair value gap up here because I'm assuming that this fair value gap, the upper portion, shouldn't even get attacked due to the balanced price range behavior I've been mentioning. So yeah, I'm going to continue to justify this aiming at shorts still, especially right now, unless of course it breaks out of that 1 hour fair value gap, because then that clearly starts to go against this particular area and price giving me a short, right? Let's see what happens. Right now it's still valid for that 1 hour fair value gap framework using the YouTube model. All right, run on stops, shift in market structure, fair value gap nested inside the daily bearish fair value gap in a downtrend after prices ran aggressively to the buy side against the downside delivery, presenting us with possible Tuesday high of the week. That's what my assumption is. So if it was to go against that, then we have to reevaluate, and that doesn't require over trading. And even if it was to deliver here, right, and maybe I wasn't able to be a part of it, right? Maybe it delivers and I miss it. What's the mindset do I have? Do I worry about it and think I'm not going to be a good trader, or think I'll never pass this, or never get to this level in my trading, or this or that? No. We think, okay, where is my rules going to kick back in alignment? Where's my model? Matter of fact, if this delivers, given what we've seen here, how it's been taking forever to deliver, if it was to deliver, that's actually good information, because now we have more confirmation behind us that it is in fact interested in declining. So maybe we find our model performing down in here, right? With the result of the 1 hour fair value gap framework delivering already, right? So again, it's just adjustments in the way that you see things is very, very important. Just because price moves away, you shouldn't feel like you missed something. So yeah, I'm going to continue to watch this here. I'm still pretty convinced that we're not done going to the downside. It's still promoting the idea that I want to see. It just has not presented me with my model yet. We are inside this 1 hour fair value gap though. So you could take a aggressive entry at this 1 hour fair value gap, framing it from the 1 hour, right? And then maybe your stop in here can go somewhere maybe above the high if you're okay with that type of risk. If not, right, if there's nothing in here that makes sense to you, again, don't let me convince you to take something you're not fully in line with, you know. But yeah, I'm assuming that this low is going to hold in price, and we're going to see price continue to drop here. We're inside the 650 macro. We've taken out buy side. Everything still seems to be intact. We got the 1 hour fair value gap delivering for us here. Now, if it was to trade back into this and get outside, again, that turns off my interest to short. And I would be looking for buys if that was the case. Like if we get above this. Oh, YouTube model probably doesn't make sense to y'all, huh? So keep in mind what's happening in here. What is my assumption? Like what am I claiming is taking place in here? There's a daily fair value gap up here that we've reached into multiple times. We're in a higher time frame bearish narrative. Nothing's changed. Okay. We've went against that bearish narrative on the higher time frame, potentially showing a weekly power 3. I'm assuming the week could still end up being bearish. It is NFP week, so you got to make sure your risk is lower, because you never know. It could just consolidate all the way up until the NFP announcement. But we're also layering that understanding with the upper 1 hour fair value gap that presented us with a YouTube model short, or 2022 model short, based on the YouTube or on the 1 hour framework. And then we're dropping down in here. We see one more attempt above the high. We're trying to support the fact that this is going to hold in price. And now we're looking for some type of entries in here. After we've layered so much from that higher time frame down to this lower time frame, and we see that things are still justifying short positions. You know, when does that turn off? If this 1 hour fair value gap range gets violated. That turns off my entire interest to want to short. So, and it's as simple as that. What am I targeting? I'm targeting the low, the next low. You could even target this low. But if we blow through those lows, there's a potential likelihood for us to even dig even deeper and see this as a potential weekly bearish power 3, right? This currently is a weekly candle that has presented a wick up here and a wick down below. The body's in the middle up here. It's kind of an indecision candle. So we'll see, if we want to get down below these lows, the target would be down here below that low, right here. And then if it can violate that and we could continue to support the run lower, we may get down all the way to these areas here because we're still in a downtrend, framed off that daily fair value gap. And the timing element right now is off that 1 hour fair value gap inside of a 650 macro. Okay, so we will see if that's going to afford us some sell side delivery. And if the 1 hour fair value gap is violated and it gets above that, turns off my interest completely for at least until it starts to show us interest that it wants to go back to the downside. Because in that case, clearly price is interested in digging a little bit deeper into buy side, into the fair value gap up here. Because then it would, it'd be starting to get deeper into that. So far, it's delivered away from that at this moment, right? So the assumption that this is potentially going to be the start, given the fact that it's Tuesday, given the fact that things haven't really fully changed from bearish to bullish, I think it's justified. So yeah, this is a little too deep of a retracement, so it's going to have to really deliver at some point. This fair value gap here should not be traded into. See if we could stay below this 1 hour fair value gap, the middle portion of it. DXY is kind of pulling back into this What are the other indices doing here? Yeah, the other indices, they're still looking like they're justifying. We could see that the SMT here, holy crap, what a move. What a wicky down candle right there. That was wild. I totally forgot that was coming out right now. Oh, snap. Came within 1 point of my stop loss. That was crazy, bro. Let's see if we caught the tiger by the tail, yo. Let's see if we could, take this thing down right here. See what that news is going to present us with. I don't like how DXY did that. They may go against the idea. Yeah, that was a wild response. I totally forgot that there was news at 7. Didn't even look at the time. Was there news? Yeah. Couple red folders, PMI. Now let's see. Still keeping it valid from that 1 hour fair value gap. So let's see if we could stay below this. If it tries to get back up here, up to this midpoint again, it wouldn't be worth trying to let it push too deeply. So let's see if we can at least get it to drop down to the minimums. We're already almost to the minimums already. It's already almost there. 20 to 30 points. So yeah, DXY is definitely taking a nosedive and not really allowing for the Nasdaq to drop, really. Oh, that's a nice delivery there. So yeah, from this area that I mentioned down to where we're at right here, you have now been offered the minimums. It's already given you minimums, possibly even at this point a free trade. Now up 50 points already. I think I will take that. So yeah, made more than half of the position that I lost earlier. Made more than half of it back. So yeah, let's. What? Why is it not clicking? Click. Oh, whatever. So yeah, you could see. So the entry from up here, taken at the low down there, securing all this, right? Or most of it, right? Because I was at half risk. So yeah, that is the goal, right? What I'm showcasing here is the goal of when you take a loss, because I took a loss and you guys saw it. Your goal is to secure at least half, right? And you don't want to put things like too heavy of a goal on top of yourself when you're in like a drawdown period. You want to try to target at least half. I'm not assuming that this is going to stop here. I'm pretty confident that we're probably going to drop, unless of course we lose this high. This high at this moment is going to act as an intermediate term high. So I think that, if we could keep that high intact in here and this fair value gap can continue to hold, we will see price look to target those deeper sell side liquidity levels. The behavior in here is definitely like mixing it with DXY. The behavior in here is a little suspect. I mean, just look at price. Look what we're navigating right in here. All right, so far, price has been a little more difficult. So we got in over here. It ended up purging that out. So it offered an opportunity in here based on the framework I just talked about for like the last 20, 30 minutes. And price offered the minimums, right? It offered 50 points itself. It is respecting this 1 hour fair value gap, which, again, if it can continue to do that, we'll eventually see price kick lower. The sells don't turn off unless the high up here and the 1 hour fair value gap gets violated. So you do what you will with that information, right? I'm not here to put you in trades. I'm here to help you learn how to put on your own damn trades, right? And be effective and how to trust things. And right now, it was a beautiful time for me to allow you to see how you need to think about fixing drawdown. You don't go in there thinking, oh, I got to make it all back and do this and do that. No. You cut your risk by half, try to make back at least half your loss. If it offers it to you, get out. Don't look for home runs. Don't look to make more than is reasonable, right? Especially when there's NFP, FOMC, and these crazy news events that are ahead of us. You never know. If you think you do know, you don't know. Okay? So remember that, because we are our worst enemy when we're in the marketplace. It's not the market that's our worst enemy. It's us. Okay? The things that we're thinking, the perspective we allow ourselves to have, and what we're demanding from ourselves in particular moments of time, especially when you take a loss. When you take a loss, you do exactly what I just did. Find a reasonable entry. And if I would have taken a loss right there, that's it, right? I made back half the loss, that's it. The amount of entries that I'm going to take today, this is all I'm going to take today, right? We're going to sit here for, probably another hour or so and probably try to identify some other stuff and see if this fully wants to play out. If I didn't take any trades, I would still, at this current moment, I'd be able to trust this until this high was to be violated. Otherwise, this entry, in my opinion, is probably going to be the one that sends us down to there. Now, you got to measure out your potential risk, though, right? It's 30 points within your reasonable risk exposure, right? Just got to think about it, right? Because if it's not, then, you got to wait till there's something that makes sense to your risk model, right? But I'm going to go out on a limb and say if you did take it upon yourself to participate in what I've shared here, I hope that you were able to follow what I did and basically make back half the loss and operate the way you should be operating. And if you did follow each step that I've presented today, and you got out when I said to get out, got in when I said to get in, took a loss like I did, but then made half of it back, then again, practice allowing this to print. Sit with this feeling of potentially missing the opportunity that we're seeing right here. I could have held it longer, right? But again, that's not the goal when you take a loss. The goal is to make the loss back, at least half of it, and be content with learning how to be content with that. There's always another trade. Right now, like this right here, this up movement down here, these down candles here will most likely act as a breaker. And if this is going to deliver from this 1 hour fair value gap, this breaker here is potentially another entry for a more protracted move to the downside. That's assuming, obviously, things are going to stay intact. Right? Let's see if that takes place. Let's study that. But yeah, don't discount the things that I've mentioned today about risk, how I just performed in front of you guys in terms of where I took profits, why I did that, why I didn't hold, some of the considerations I've mentioned. I want you guys to think about these things, okay? It's very important, super important. So yeah, as far as what we're going to look at moving forward here, right, we got to consider this huge drop. We are back inside of a PD array here. I think it's a volume imbalance or daily bullish order block. I think that's going to end up holding in price. And again, this right here, this up and down movement, I think that's going to end up presenting a bearish breaker, right? I think that's going to be able to be a particular entry potential, right? Or another portion of this setup, another phase of this overall price delivery. And again, this delivery to the downside turns off if it ends up, in my opinion, getting back above the highs up here, or if it tries to get back above the regular trading hours gap. That would definitely turn my interest off. I wouldn't really be fully behind something that gets back up into here. And again, if it does that, then I'm assuming that today's not going to have much of a range at all. It may just end up being a, consolidated range ahead of tomorrow, because we have NFP happening tomorrow, or a portion of NFP taking place tomorrow. Yeah, it's a big drop right there, so kind of skeptical as far as whether this is going to hold or not. But we'll see what happens here. Definitely skeptical seeing this take place. I don't like that. I don't like that at all. So yeah, let's see what happens. So I hope you guys have picked up some good information from today. Yeah, no, Mark De Leon, yes, it is absolutely reckless. You've spotted that, so what does that mean? That means that you need to pump the brakes, sir. Okay. Uh, it is what it is. Sometimes you got to pump the brakes. If this doesn't hold in this area here, completely uninterested. Like, I'm personally, given what we see in the DXY, I'm really not interested in general at this point. That is way too aggressive. It's been very choppy, sloppy. And part of the chaotic mess that we'll probably end up seeing the next couple days is from what's going to happen tomorrow in the economy with the tariffs and all these different things coming out. We have no clue what's going to take place, what the impact's going to be. The level's holding for now. Like I mentioned, it should hopefully, right? So this entry here, if you would have got into it, right? I didn't because of what I've just been mentioning. It's just chaotic. I don't really like how DXY is behaving. But if you would have, I believe the minimums have been offered there as well. It's making you fight for it, So again, given what we see here, we're in very high resistance delivery. So I'm not necessarily too excited, right? And I'm manage my expectations and share that experience with you guys, right? Of course, look what's happening. It's delivering. What do I feel like right now? Am I upset that I didn't take the entry? All I did today was take a loss and make back half the loss. Is that a losing day for me? Or did I follow my rules so next time when I take another loss, I'll be able to manage myself properly, right? Is that a winning situation overall, or is that because I took a loss financially? Is that going to make today not worth the experience that we got, right? Does that make today a bad day? No. I followed my rules. I did exactly what my protocols are. When I take a loss, how do I behave? I did exactly what I'm supposed to do, right? Am I 2 trades a day, the limits that I place on you guys, that I tell you guys to follow, which I follow faithfully? I've also been able to showcase that to you guys as well, So you see me leading by example, and so hopefully that can inspire you to do the same thing. And NAS, I think NAS is, I don't like what DXY is doing here, so I really don't trust this at all. Intermarket relationships are completely lost. The T-bonds are supposed to fall, or they're supposed to impact what the indices do, what the foreign currencies do. Currently, we're seeing the DXY not correlate with what it's supposed to do with the indices. We're seeing all those, right? All the indices plus the DXY and the bonds and yields all cracked in correlation. There's no symmetrical behavior whatsoever across the board, right? I mean, you can make the argument that the yields are definitely pushing the DXY lower, all right? But we're kind of witnessing some chaos right now. If you go back to this, though, again, if you would have taken it upon yourself, right, and made your own decision and taken this opportunity that I mentioned could potentially set up a short to target the low, you would have had a profitable endeavor. I personally did not take the entry because I don't like how the behavior is. But even if I liked how the behavior is, the crack and correlation, I don't really like either, right? But if I would have taken the entry there, again, I would have targeted the minimums, hit this low, and that would have been it. But because I took 2 trades already, I'm unable to take another trade. Because if I don't place limits on myself and my own trading, who's going to put limits and stop me from overtrading? The market's not. The market wants me to overtrade. It wants you to pour all your money in and play this like a slot machine. Like it encourages you through the price delivery, through the lifestyle BS that people sell you on social media. They want you to put money in every minute of every day because you become liquidity. There has to be winners and losers, So if you're not going to stop you, who's going to? Nobody will. So overall, what we talked about from this 1 hour fair value gap Say you don't care about any of the stuff I've mentioned on this lower time frame. Say you simply took the 1 hour framework that I said from the 1 hour fair value gap, creating that YouTube model short position, right? Say you just took that. Clearly that played out beautifully, right? Clearly. But again, you have to consider your risk protocols, right? I don't risk more than 20 to 30 points a trade. So that's why I don't take entries off the 1 hour. I go into the 1 hour framework as I did today, and I look at places where my model is going to form within that higher time frame framework, right? And we see that there's been high resistance delivery in here. So it's went deep retracements and slow grind down to the targets we had outlined. But the overall framework took place, right? From higher time frame, daily, down to the 1 hour, right? So daily fair value gap, bearish, to the 1 hour, YouTube model, bearish, and then into the price leg here that ended up delivering that overall delivery, bearish, right? We found order blocks. These up candles here created order blocks, right? The midpoint of this 1 hour fair value gap, even through the news, it held in price. So you could just see the validity behind the overall analysis. I said that we would turn off bearish interest if this 1 hour fair value gap was to be traded outside of and used as support. Did it do that? No. So what have I been saying is the main goal here? Buys or sells? I've been saying short. It hasn't changed. We didn't say buy when it was running higher. And why is that? How do I have the ability to know that and make those types of statements and not flip-flop, thinking I'm going to miss a buy, when I'm assuming it's going to short? Because I'm rooted on the higher time frame. People don't like how long the higher time frame takes. They think that you can find more opportunities when you go to the lower time frame. Although that somewhat is true, because you can find moves all throughout here. But none of these moves on the lower time frame are going to be accurate and consistent for you if you're not rooting them in the higher time frame view. Because the higher time frame view is where the true story is at. And the better you can navigate the higher time frame, which from ICT's his own advice, is where he spends the most time. He's been asked that question and answered it, right? Like, where does he spend the most of his time? It's on the higher time frame. Daily, weekly, monthly. 1 hour. Those upper time frames are that important, right? Because if you can figure out where those time frames are going, you won't be fooled. Like today, I wasn't fooled by this run higher, thinking it's going to buy. I said that if it gets outside of a particular level, if it gets outside of this 1 hour fair value gap in particular, that goes against the downside. So that would be where I would adjust. If not, I'm going to still look for shorts. And I mentioned it all throughout this price delivery. Yes, I got a little sloppy choppy, but nonetheless, I showed that there was opportunities. I showed you what I took. You saw me take a loss because I'm not going to win every day. Neither are you. All right. I showed you how I managed that situation. I showed you my mindset after I took the loss. And all the way up until now, we've still continued to justify, stick to the downside narrative. And you could see that pays off. Right? I pointed out one last opportunity. If I wouldn't have taken any opportunities prior, say I would have missed both of those, that would have been the opportunity I would have taken in here. Was this down candle in here? Because this up movement, down movement, that creates this as a bearish breaker. That's also coupled with the 1 hour short idea. But again, it's higher risk because we are ahead of NFP. There is massive lack of symmetry across the board. So everything is high resistance, low probability delivery. Does that mean you can't trade in that environment? Absolutely not. It just means what? You have to understand the risks at hand and lower your risk. I started today with 0.5% risk. I took a loss, and then the next trade was 0.25% risk, aimed at making at least half of the original loss that I took back. What did I do? Right in front of you guys, I performed within that framework and did exactly that. And I demanded no more. Okay? And that's how you need to operate. It's very important. Obviously, if I would have held from the 1 hour framework, and got in up here or whatever and held it through, obviously there was a chance to get a lot more. But that's not my goal when I take a loss. When I take a loss, my goal is to make back the loss. And how do you do that? You go slowly, step by step, in half increments. Make back half of it, and then try to get back the rest of it. If you can make all of it, great. But your risk at that moment needs to be cut in half. Why? This is called regressive risk management. It's something that majority of actually profitable ICT traders use. And it's the thing that ICT uses himself. The regressive risk approach, meaning, if you take a 1% loss, the next trade is cut in half. And then if you take another loss, you cut that in half too. And then trade at that lower level until you make the full loss back, the full 1%. Or whatever the loss amount is. You don't move it up until you make it back. Why? Because you're giving yourself a buffer zone, time to make things back and protect your account. And your equity curve will look like a slow up, like staircase higher, rather than look like this price delivery we see in here, right? If this is your equity curve, there's something wrong with your risk management. If you get massive wins, but then you crash and burn, you're doing things incorrect. And that's going to be the reason that you're not going to be successful. It doesn't have to be that way though, right? So yeah, let's now move up and see if we could find a different framework that we could maybe use to get or to study a move that can get us back in line. Oh, whoops, the hell was that? Let's see if we can find a particular movement. DXY looks chaotic, right? So anything that would be taken here would have to definitely be considered high risk. Okay, all of this has been high risk. Everything that we've mentioned today in terms of support to the downside, framework wise, has all came to fruition, right? This is another good example of bias isn't everything. We've been correct pretty much 100% this morning overall about where price is going to go. But guess what? A loss was still encountered. So bias is not the only thing that matters. Some students I see on social media say it all the time. Even some students that come to me, and try to learn. That's not the case. It's what is the answer, right? What is the overall sauce, right? The actual answers to what is needed to be successful. It's an accumulation of many skills: bias, narrative, validation, invalidation, risk management, targeting, what your model is, mastering your model. See, let's watch this here and see if this is a bearish breaker on this time frame. I think this is going to be a beautiful delivery from this bearish breaker. If we are going to see a large range, this should be able to present us with that. So remember the phenomenon I mentioned here about these large wicks that overlap candles. This area should not be traded through, this midpoint. It should act as a balanced price range. If it's to get above that, that's an issue. That's a problem. And I wouldn't be interested in shorting. Technically, we are inside of a consolidation. And this is not unreasonable to think about overall, because NFP is tomorrow. But yeah, bias and narrative aren't everything. Just to make sure I really ride that home. There's so many things. That's why I talk about so many things. There's no one size fits all either. Everyone's going to use the tactics a bit different. But how you manage risk, though, doing or accepting a process like I've shown you today in terms of managing risk and how you deal with drawdown and how you should be thinking after you take a loss and what you should do after you take a loss, that's very important. That's non-negotiable. And in one way or another, you're going to have to figure out a strategy that makes it so you don't hurt yourself. But yeah. No, I just load the bases and keep making hits because I just said the same thing. I spent years aiming for home runs. Yeah. Sorry I got to your comment so late, Tony. But yeah. Many people spend years and years and years and years doing the same nonsense. It's insane, you know. All right, so like I mentioned, if we end up getting up here and it pushes too deeply into this range, that's not what we want to see. That's going to support us having an extended move lower. There's already a risk of us not expanding aggressively towards any particular higher time frame level because of NFP tomorrow, or a portion of NFP tomorrow. NFP weeks are scalpers markets because it's going to use the news to manipulate you. That's why ICT says not to even consider trading these weeks, because most traders are not going to have the self-awareness and discipline to not overtrade. They think that these huge days that we see during NFP is what they need to participate in. It's not, you know, because especially if you can't control yourself, and you're going into this battlefield where it's known heavy manipulation that's used to confuse you, so it gets the most damage, because that's, you know, what it's used for. If you go in knowing that and you still overtrade and you're not prepared, I mean, you can imagine, you know, the amount of people that are getting destroyed, you know. So yeah, this candle here, this is that wick I was showing you guys. Right, if we go take the box off. Right, so if we go to the 1 hour, let's see. See, it's a pretty large wick in there. Just take a look at this. Again, I'm still not overly convinced that this is going to stop going lower. I just see this as a potential either pull back into the range to consolidate. I mean, you could actually even make the argument that there's a premium fair value gap mixed with this wick that may act as a run on stops, shift in market structure back to the sell side, and then start to frame out a 10-minute YouTube model short position off of the 1 hour YouTube model short position that we outlined earlier as well. You could see how things start to layer on top of each other. And if you miss one move on one time frame, you can simply move to other time frames. And sometimes there's moves taking place there that you could frame as well. It's just the precision element for risk management is much more accurate on the lower time frame. That helps you minimize the risk in the same higher time frame moves. So yeah, this 10-minute area in there, I could simply just honestly highlight this here. Or I could do that too. But this area here, if we're going to go lower, it should be able to hold this and continue. Like this should be able to offer another move lower. If this is what's going to offer the move. You could take this run higher, this retracement, and take this swing low. Think of this as a run on stops. Higher time frame PD array positioned at the high. If it violates this swing low, maybe it leaves a fair value gap. There's another continuation variation of the YouTube model. And if price is going to end up continuing to short, that could end up being another opportunity as well to take price lower. All right. Let's see what happens. DXY is kind of rebounding here. DXY looks like a mess. Like I said, anything that's delivering in this range, given all the cracks in correlation, the extreme lack of symmetry, it's a high resistance environment, you know. So what do you do in these environments? You are extremely demanding. We're demanding that price shows us certain things. And for me, and maybe for you, if you followed what I was talking about earlier, 2 trades have already been taken. So guess what? No trades are going to be taken now. Okay. But of course, if I didn't take the trades I took earlier, maybe I missed all this stuff in here, right? This would have been the backup opposed to the ones that I took earlier that you saw. But if I didn't take those, this one would have been the one I would have taken to short. And I'd be waiting. If I didn't take those, I'd be waiting for this swing low now, given this 10-minute framework we're talking about, layered with the daily for value gap to the 1 hour YouTube model or 2022 model down to this 10-minute retracement to that fair value gap inside that wick. That framework being this here, inside this wick. right? So this retracement into this fair value gap, that's potentially a 10-minute YouTube model to short. So within that framework, inside the higher time frame bearish narrative, I'm looking to see what this swing low is going to do. And we'll see if we can find a model that we operate within delivering here, continuing to push to the downside. We'll see. All right, we'll see what happens. Let's see. Do we have any inversion for value gaps? Not really much to the left. Got that for value gap. Again, I'm more kind of interested in the response we're going to get from this wick. Want to see what the behavior is going to be from that wick. Let's see, is it a 1 hour too? No. This is kind of red flaggy, right? We kind of just stuck in a consolidation at the current moment. This has delivered and taken out sell side, as I said it could. But now we're pulling right back to the equilibrium portion of this consolidation range here, from this high to now that low. We took out buy stops, took out sell stops, and now we're returning back into the midpoint. So this high to that low, because this is our current range, most recent range that took buy side and sell side, go from this high to that low, we're at equilibrium. All of that is dancing within the daily fair value gap. So we're clearly inside of a consolidation. I would like to see us start to push away in some capacity, in this case to the downside, for us to want to get back in line with the short idea. We have these relative equal lows down here. It could use this area in here, right, that fair value gap I highlighted, as the possible positioning point to drop. If it does prove that that's the case and it does want to push away from this area and target some of the sell side, I'd prefer to see DXY run higher to help confirm that so I could trust it, given how sloppy things have been this morning. And then for me to justify a particular entry going lower, right, if I was to try to frame that with all that stuff that I just mentioned, I would like to see a displacement, right, from this area after, of course, we take this high. It's also at a new week opening gap, so we're layered with many things that could be acting as resistance, plus that down wick, the midpoint of that, which is the middle portion of this box here. It's a possible bearish breaker here as well. But in order for me to use all that to justify a short, right, I would have to see a displacement away from this. Hopefully you guys can still remember the daily, from the daily to the 1 hour to the 10-minute, what we've seen, and then how we're thinking about pricing here if I was going to consider another entry to the downside, right? I would prefer to see DXY rally in that moment if that was going to take place. And I want to see us stay below this area here. This can technically end up being a run on stops, right? And then if we could shift below this swing low here, maybe even shift below this one and leave a fair value gap with DXY rallying, because we're in a downtrend still, and that has not changed. That only changes if this high up here gets violated, because it's an intermediate term high for me. But if we get a shift in this regard, I'm still bearish. So this is how I would frame a continuation, right? Yes, there's a retracement taking place in here. Yes, price was delivering to the downside. Now it turned around. But this retracement here could very easily just be setting up this lower time frame continuation variation for another short, given the fact that overall we're not done in the downtrend. Price has just stalled out though, and that may not work out because we're ahead of the news, right? It is delivering from this fair value gap, at least for now. The other indices are also doing very similar things, right? Given a decline. I'll tell you one thing, if we lose this high on the S&P, if we start to contest this high up here, then obviously shorts, I would not be interested in shorts. As long as this high stays intact, We have a SMT off the daily time frame that's dropping. But as long as this high stays intact as an intermediate term high, that we're going to continue to see price favor shorts. And I'm not interested in taking a buy. Given what we see here, I see really no reason. Just supporting ourselves with the higher time frame analysis and the things we've talked about. I don't see a real reason to want to buy until proven that buys are going to be meaningful. So yeah, those are just my thoughts and how I'm seeing things at the moment. So we'll see if that stays intact. Again, if it is going to short, I would really like to see another displacement from in here. Maybe take out some of the lows in here, stay below this new week opening gap. That's what this line is here. I believe it's the new week opening gap from, it's Friday's low, right? Friday's close. That's what the gap is that we're looking at here. This gap. Mark said, good possibility. Watching the 1 minute candles close below new week opening gap. However, it's not showing. Yeah, it's giving mixed signals in here. But again, when things are a little sloppy, we got to remember what's ahead of us. We have news coming. So that's automatic potential for high resistance, cracking correlation, unreliable, unclean price delivery, lacking any real interest to get to one side or another until the news comes out. Because why? They're building liquidity with these news events. They want you to think it's going to buy, it's going to sell, it's going to do this, it's going to do that. They want everybody stirred up so that when the event comes out, they can destroy everybody and nobody could be right. Sometimes it's even best if we're in a consolidation before NFP comes out or FOMC or any of the others. Sometimes it's best if you do want to trade, let the whole week pass until the news event comes out. Wait and see what they're going to attack and then what's left behind. And then, 45 minutes to an hour after the news event comes out, whichever one they are, 45 minutes to an hour after, you can go in and see what's left. And then maybe something more clean will deliver around that time, with the news behind you. That's a strategic way some people like to trade the NFP or FOMC or anything else. So yeah, I hope that makes sense, you guys, and I hope that you guys have been safe this morning. I hope that no overtrading has taken place. I hope you guys took down what I mentioned about how to manage when you take a loss, and what your goals should be. It's very important. It's extreme. I can't stress it enough. I say it all the time, and it's probably hella annoying to some people, but man, especially if we have less than a year of experience, right? We don't know what's important. We think we do. We think we know. Maybe we'll watch a bunch of content and have a couple of good days. We'll think we know way more than we know. When in reality, early on, first year or two, we know absolutely nothing. Whether that's technicals to psychological. Psychological takes years. Like, that's not something you could learn in a year. How to manage your psychology and manage the emotions that come with certain price delivery. How you feel in a big move. How you feel when you take losses. How to recover from that stuff. Like, you could just imagine. That's not something that you could just learn a technical skill to and say, honestly, you've been able to master it just because you learned a technical skill behind it. That's something you have to witness and feel and work through, right? And I'm sure all you guys that are on this call that have been with me throughout the whole morning, you guys clearly take this serious, because most people won't sit through a video that takes an hour, let alone 2 hours, sometimes 3 hours, because we talk about a lot of important stuff, so I'm sure you guys know this, or at least know of this difficulty and how this there's a reason that this takes long. It's not because technicals are so complicated and whatnot. You can reasonably learn the technicals and get a process, probably within like, a year, 2 years, maybe. A lot of the technicals will make sense. How to piece everything together, though, that's another thing that takes a little while. You've seen today how I've coupled many different things on top of each other, right? I've stated different things that I didn't want to see in order for me to go short. You could see, prices contesting that, going right back into the middle, creating consolidation. So the validation areas, the awareness to the conditions, how this could have been anticipated, right? We were anticipating potential high resistance. There's a reason I didn't attempt more, right? I said this would have been the only opportunity for me to take a short if I would have missed all these opportunities up here that I talked about, the two I pointed to, right? This would have been the only other entry. I mentioned something over here, but that didn't offer anything. So if I would not have taken any opportunities and I was waiting for this move to give a breakdown to offer another short, I would have stepped to the side. This would have sidelined me for the rest of the morning, because now we are clearly in consolidation. We are in time distortion on the higher time frame ahead of NFP, right? And the delivery from this area, if it was going to be reliable and a clean environment that was going to give us something worthwhile to attack the lows down here, that aren't going to make us fight to the death, okay, with ourselves, that just hasn't taken place. It's back into this range from this high to that low. So now, of course, if we lose this high and we lose this fair value gap, that is going to make me feel like we may want to target the high up here. There is liquidity up here. There's equal highs up there too. Does price running up there turn off my interest to short the rest of the week? No. No, it doesn't. That pulls us into a deeper premium. That pulls us into an area where logical stop loss orders are resting from the people that were succeeding last week in their short positions. It's also pulling us a bit deeper into the daily fair value gap. Sometimes it takes a little while for these daily points of interest to deliver price because it's on the higher time frame. Sometimes the lower time frame will dance around at a level we're waiting to see price deliver from, and then maybe you'll take a loss as it's delivering in there, as you're waiting for it to give you the overall objective, right? That being the move from here. If you overtrade and over leverage and you don't trust the higher time frame and force yourself to submit to that higher time frame, if you take a loss in here, you'll probably totally toss away the bearish narrative when it's clearly bearish. Just because it runs up above these highs, it's not going to stop it. Our invalidation levels are where? The midpoint up here, because this area should act as a balanced price range given what we talked about earlier. All right, so this should be able to hold in price. Okay? And it should be able to stay down. Running up above here is totally okay. I'm totally fine with that. Obviously, I would have preferred to see price deliver from this 1 hour fair value gap, which it faked out. It pretended it wanted to do that. All right, I took a loss, and there was 3 opportunities that were offered to take a short that could have bagged the minimums, right? But it hasn't delivered that now, right? It came down, swept these lows out. Now it's deciding to turn around here and attack these potential relative equal highs here. Losing this fair value gap here, again, puts my attention to the highs. And then I wouldn't consider shorting, or I wouldn't consider taking any short ideas until price gets up above here, stops these people out, so I can know that work has been done on the buy side. And then I would need to have that followed up with a displacement back to the downside. I'd probably even wait for this, upper time frame, 1 hour, 15 or 30 minute to give me a shift in market structure before I can actually really trust it is going to go lower and not want to continue, excuse me, Like hiccups. Holy crap. I don't think I'm going to be able to trust this is going to short yet until I see buy side taken in this regard, right? Up here. But again, where all this work that's taking place, all this discussion that's taking place in here, all this price delivery is just working this daily fair value gap. So if you were to take a loss in here, trying to short, or maybe you took a buy and you took a loss, and then as a result of that, you decide to disregard the whole higher time frame assumptions that we've been talking about, I mean, does that seem reasonable for us to do if we're identifying this downtrend on a higher time frame? Is it reasonable to take a loss of some kind that we may have taken on the lower time frame and just toss out what's happening on the higher time frame? Because that's what most people do. Because again, they're not submitted to the higher time frame. So as a result, if they take a loss, they completely get distracted and throw away their higher time frame assumptions because of something that happened on the 1 minute, on one day in the week. You know, maybe you got trapped on that one day during the week that went against the higher time frame. It's reasonable. There's manipulation that takes place Sunday, Monday, sometimes even into Tuesday, because Tuesday, Wednesday has a likelihood of creating the higher, the low of the week on either one of those days. It doesn't always happen on Tuesday, doesn't always happen on Wednesday. So sometimes it goes against the higher time frame move or interest up until Tuesday or Wednesday, and then sometimes the week may consolidate if we're ahead of a news event. It could lead us to harder conditions like you guys see today. You guys see it's been reckless, and I'm proud of you guys if you didn't overtrade and over leverage. I'm grateful that you guys have been listening to what we're talking about rather than trying to enter and because if you blow your account, if someone's teaching you and talking to you and you go in there demanding entries and blow your account, your focus is now gone because now you're upset. Oh, I need to make the loss back. And you're focused on that rather than listening to all the context that can get you to making back whatever it is that you lost. Right? On your own, not as a result of me. I don't want to be the cause of that. I want to be part of a small part in you being able to learn how to do it on your own. That's the goal. It's not to have you guys follow my trades and only follow my trades. Otherwise, you can't take a trade. That's not what I want you guys to do ever. I want you guys to learn how to do it on your own. And these types of conditions are amazing for you to sit through. Because this happens sometimes, It's not always sunshine and rainbows. It's really not, And not every moment in the market is a time that you need to think about taking an entry. When you see higher time frames overlapping like this, when you know that we're ahead of a news event, right? When price is cracked in correlation, the symmetry in the market is completely off like it is today, like we talked about. All of that stuff is showing you that we are in a high risk, high resistance environment. Okay? The probability is much less likely to show anything worthwhile when all that stuff is overlapping like that, right? Because everything that I just said is overlapping right now ahead of NFP. As a result, you see the price delivery. Buys and sell ideas, right? Buy and sell ideas are getting violated right now. Whether you shorted or bought, if you don't have a scalper's mindset and you don't have a grip on overtrading and limiting yourself and knowing when not to trade, everyone that's inexperienced in that manner, they're getting destroyed. Okay? Instead of focusing like you guys are and listening to ways that you can improve, how you navigate these types of environments, how you want to expect this type of stuff to take place when NFP, FOMC, rate announcements for the interest rates, ahead of those news events, you want to anticipate this type of behavior. When the market is cracked in correlation, you want to anticipate high resistance. when it's Monday or Friday or Sunday especially, and there's no news, anticipate high resistance. When the higher time frame is overlapping like this, on the higher time frame with whatever asset you're trading, you're in high resistance. Maybe it's going to take a news event for us to get out of this range. What news event? Well, thinking about this week, what news event's coming? NFP. So maybe they hold price in this range, building for both sides. And then all of a sudden they use NFP to punch it out. It's very, very likely that that's going to take place. Okay? So yeah, if we come back over here, we see how DXY has now rejected. It came back inside. Notice how this balanced price range area I've mentioned, notice how we're doing a lot of work inside that. Back and forth, back and forth. It's range bound right now, right? All the markets we've been looking at are range bound. Right, they're all sideways. Another reason is it's anticipating what's going to take place tomorrow. Big news is coming tomorrow, economically, and not only NFP. We're talking about massive financial adjustments to how we do commerce with other countries in terms of America. Things are going to be crazy the rest of the week. They're about to be insane. And we don't know. I've never traded through a huge financial adjustment or an economical adjustment like what's going on tomorrow. Probably none of you guys have either. This hasn't happened in recent history, right? At least, for America, So we're all going to see what's going to take place. And it's going to be a good learning experience. So we could see how prices now got above that Friday or that 1 hour high I mentioned. Because that's the case, I'm now interested, at least for the rest of this session, I'm interested in seeing if we could blow the high here. And then maybe even get up above here. All right, I'm definitely interested in that because this now turns into what? A bullish breaker. All the sell side ideas have been violated. Fair value gap, multiple PD arrays. So now I see this up candle here as a bullish breaker. And in order for me to want to short again, we're going to have to violate through this range and start to really press lower. Yeah, see this fair value gap here too on the 1 hour. This is going to, based on what we're looking at here, it's going to act as an inversion. It should act as support and act as a potential balanced price range. This up candle here should deliver. If it doesn't blow the high out and it can give a retracement, that may set up a decent move. We're in the 750 time, so we're inside of a macro. So what's happening? Price is accelerating because the macros do exist. Okay. So it is what it is. Lots of controversy about that, but hey, guess what? It's too bad. It's too bad. Eat it. Because it exists. Right, so yeah, let's, where is that? Yeah, so this 10-minute breaker, let me actually pull this back a little bit so it gets out of the way. Again, we're still inside that daily fair value gap. We can't lose focus of that. But currently right now, again, we are pushing higher. It's interested in blowing buy side out, at least from what we see here. And if it doesn't and it leaves that high, there's a risk of it just coming back into the range because currently we're in a consolidation. DXY is definitely gravitating lower here. So we'll see if this macro ends the silver bullet time window by delivering through the buy side here. Maybe that offers an opportunity to go higher, right? Because we do have this breaker. Maybe it doesn't get back to this breaker and it just stays up in this fair value gap. We're really close to the highs, so it may not have to really retrace much. Maybe this created the delivery here that's going to come off that breaker. It shouldn't have to dig too deeply. This low should not be violated. It should stay intact. So anywhere in here, if it's going to go higher right now, it's going to do it inside this area. And of course, that's justified by an overlapping 1 hour inversion fair value gap. See, so there's that fair value gap, aiming for the buy side. Do what you will with the information, right? I'm not telling you to get in. I'm not telling you not to get in. But I'm telling you where price is going to go, and you're going to do what you will do with that information. Right? I told you why we've already adjusted, why we've switched. We've switched officially, at least in the short term, to seeing price potentially now blow out the highs. Because shorts have been completely invalidated for us right now. So we're certain that until it proves that it wants to kick back into sells, we're going to continue to march higher. Or it's going to consolidate, you know. So you gotta reason with this information I've just said to you. But it's working out exactly as we're talking about, right? So let's see if it can blow the high out there as a result of this opportunity I just mentioned off the breaker, because the 1 hour fair value gap's been violated. The sell ideas have now been turned off as price broke through the high, and now this instead of favoring shorts, at least for right now, in the short term, is looking to attack buy side. Right? And again, that doesn't change the higher time frame narrative. It just changes the bias for right now. Bias and narrative are different, right? I've mentioned it before. I won't get too deep into it here. Again, I've talked about it a couple times, but yeah, so we're still seeing this delivery here. Price is pushing higher. Let's see if we can get that to break through that as a result of this bullish breaker. And also the fair value gap. I think we can. I think it will. I think it will be able to push. We got an order block here too. We got possibility for up to 50-ish points within the macro. So I think it's reasonable. Yeah, let's see what happens here. See if we can push that through the highs. It's coming back into the breaker. Yeah, we're inside the macro and we're so close to that liquidity pool up there. So because it's so close, and it's clearly wanting to reach for buys at this moment, because all that's in place and we're at the macro and we're just so close and there's relative equal highs there, I think it's pretty likely that they're going to blow that out. You know, again, we are inside of a range-bound environment, so there's a risk, especially because we're ahead of NFP and how it's looked today. There's a risk of them not, like, they could just leave it and just pull right back into the middle. It's just the risk of high resistance, low probability conditions with the lack of symmetry ahead of the news event. But again, there's still opportunities. Like, there's still likelihood it could get up there. But you have to reason with yourself. Is it enough evidence, given what we see in price and some of the things I've been mentioning, is that enough evidence for you to make a decision to enter? You know, because not everybody is going to say that this is justifiable for them to get into a trade. You know, maybe it's just a good study opportunity, right? But again, it's the personal effect of trading. You have to make these decisions, because just because I say something doesn't always mean it's going to work out. Just because so-and-so says something doesn't mean it's going to work out, right? Maybe it does, maybe it doesn't, but you need to reason with yourself as far as, you know, whether that opportunity is something you would participate in based on your rules. Because thinking like that, whenever you're learning from somebody, that's how you cultivate self-reliance, okay? Rather than just going and trying to have someone else think for you, right? As you guys could see, the assumption that price was going to go higher and attack the buy side has came to fruition. 50 plus point opportunity offered from this area. So again, I mentioned it. I said where I think it's going to go. Gave you a little bit of insights as far as how you should be viewing things. And, you know, you do what you will with the information, right? But clearly, right? Price went right to it. To start the day, we said the price was going to go lower. It did offer some opportunity to be justified in that thinking for price to go lower. It targeted a reasonable area. I personally took one trade and then had to make back the loss that I made, which is totally fine, right? And then I talked about down here, there was the opportunity that I would have participated in if I didn't take a position in here. In this price delivery, I said if it was to break down below that, I could have favored shorts again. It didn't do that. Now we've came all the way up, blew this high out, created a bullish breaker. I said that justifies an opinion to now switch, at least short term. I identified this fair value gap, these relative equal highs up here, gave you a bunch of thought processes in between that way of thinking for price to get up here. And then obviously from the fair value gap, price delivered and offered a move to the buy side, pretty much as we said, as we made this adjustment. All right. So yeah, I hope you guys have gotten value from today. I think this delivery up above the highs here is going to do it for me. I think we'll put a ribbon on it. I know you guys have been here for a while. I'm grateful that more of you guys stayed through majority of the call. I greatly appreciate it. Because I try to give you guys the most value. I know you guys are busy and stuff. I try to pump as much value as I can so you guys can get the most out of your time that you spend here with me. I appreciate you guys' support. Again, if you guys haven't already, definitely like the video, share the video with friends, invite people you think can be assets to the conversation. I want to get this community to be filled with people that provide value to each other. And build it into a community that lifts each other up, versus clouded with a bunch of controversy and nonsense. So the whole community becomes an asset, not just myself. Although I'm going to do my part and try to get everybody the value that I think is most important. Do my best to get you guys moving in the right direction. But eventually I want the whole community to be an asset in itself. Like my private community, for example. That community is a massive asset. There's savages all throughout the small Discord. And everywhere you look, you can get an answer. Everywhere you look, you can see evidence that this stuff works, that it's possible for you from any background. So I want to have that same vibe here on YouTube as well. And then, of course, I have my free community. I want that community to also have that same value as well. I appreciate you, Ski Mark, right? And you guys should join the Discord, right? Mark giving me a shout out. I appreciate that, brother. It's definitely valuable if I could have my students promote the value that's in the community. Because it's one thing for me to say stuff, but everybody on social media says stuff, right? They say they can do this, they can do that, they can help you do this and do that. It's a different story when there's other people promoting the validity through it. It's better through word of mouth than it is for me to even run ads to try to get more of a base of followers, or a base of students. It's word of mouth, in my opinion, it's just better, because everyone's more tight knit, more people know each other, and I don't know, it's just more of a family dynamic, and that's how I like things. That's how I run my private Discord. It's like everyone's a family, and as a result of that, everyone feels that they can, be comfortable with reaching out, and it's just a better dynamic, I guess you could say. I appreciate you shouting that out, Ski Mark. Definitely follow what he's telling you guys. Go at least check it out. Check out what we have to offer in the free community. And if you want any more personalized learning, more face-to-face type personalized experience, more intimate involvement through me as a mentor, then obviously there's the private community access. You can go check that out as well. Whether it works for you, whether it doesn't, there's an option and a way to make WMG trading, this community, a home for you and anyone that you think needs help in trading. We got a place for everybody, so definitely check out some of the things we got to offer. But I guess with that being said, you guys, we have discussed a lot today. I think we covered a lot of bases. We kind of witnessed the chaotic Kraken correlation, how things were unwilling to do certain things, how, one thing was thought of, we found opportunities in that direction, that being the downtrend. We see how that got denied, and then how we would have adjusted to that, which was over here. If I wouldn't have taken an entry all through here, I could have just waited and still been able to find an opportunity to participate. So it's just another piece of information to add on to the fact that you shouldn't be worried about freaking out about missing moves, right? You shouldn't freak out about moves. There's always another opportunity. Just wait for the YouTube model to take place, right? For example, this here, run on stops, higher time frame PD array, okay? Shift in market structure, invalidated higher time frame levels, at least for the time being, fair value gap. So we had all in this one piece of price delivery, overall change in the state of delivery, right? Created a breaker opposed to the downtrend, invalidation, right? So we inverted this 1 hour fair value gap, and then it created the YouTube model, right? The rules, right? Even though price is delivered, that's great. How do we get involved with the price move that's already moving? Let it play out. Let the rules reset, right? If this is where we're headed, okay, well, where's a run on stops? There's a swing low, right? Run on stops. Shifted market structure, leaving a fair value gap, right? We also, in this case, can layer higher time frame levels that can turn it around, right? There's a fair value gap, price entered into it, and then it delivered away like gangbusters, right? Right to the highs, beautifully, right? So yeah. So we navigated all this today. We're able to find specific opportunities that you saw real time, where you depending on what made sense to you, it offered multiple times for us to make a profit. As long as we didn't overtrade, as long as we stayed patient, and if we did take losses, after we took 2 trades, I myself stopped and accepted a small losing day today. Right? And I'm cool with that. I'm totally fine. Do I sound stressed out? Right? Do I look upset? Right? It doesn't matter. This happens so often. And it's best for you guys to try to figure out how to get there. Okay? To that way of thinking. And the more time you spend here with us, the more you'll see how realistic that way of thinking is. And who you decide to let into your sphere of influence as a trader, a lot of times will have an effect on you guys. So if you're around a bunch of idiots that overtrade and over leverage and think about this Lambo here and this and that, if you're around that mindset, you're going to by default, unfortunately, be programmed to think that way. But it's also true if you're surrounding yourself with people that have the right mindset, that speak the reality of trading, that show you the right ways of doing things to protect yourself, protect your account, and have more long-term success, that will also spill into you and your performance and mindset as well. All right? So be extremely guarded with who you allow into your sphere of influence. And again, I don't say that to make you just take my word for hanging out over here, right, and listen to what I have to say. Think about the things that I say, apply them to your own mindset, right? Take some of the stuff that you think is valuable and see if, it's worthwhile to hang around with us more, and if you do find that it's valuable to be over here and to hang out with us more, spread the word, tell your friends, make sure you don't forget to like the video, subscribe to the channel, and, we don't blow accounts over here, right? So if you don't want to blow your accounts, you want to definitely hang around people that aren't going to put you in that position. I'm not the type of mentor that's going to tell you to take 500 trades. I'm not. There was like 4 or 5 opportunities in here that we pointed out that could have been a possible opportunity. I only mentioned, 3, right? I mentioned 2 in here, 1 that took a loss, 1 that was potentially going to form. Well, I mentioned this one as well, right? 1 in here off this low to then simply just blow the low out there. Then I mentioned 1 could form in there. It ended up not forming, so that was a failed opportunity that didn't even arise. So technically it's nothing. And then once price got up here, showed an interest to try to blow out this high, I talked about this one up here. So wherever you felt more comfortable, obviously you want to mark that, take a screenshot of and leave some notes about in your journal. And just try to mine what you can mine from some of the things we've talked about today. And again, if you guys get value from the stuff we do here, definitely try to spread the word. Again, I want to increase the size of the community with quality people. Everyone's welcome, right? But I want the whole community to be an asset, right? So that means everybody helping everybody, everybody putting a hand to someone and trying to pull them up, keeping the positive vibes, and just turn this into a community that can really actually help people. Aside from what most of these mentors are doing, just trying to sell nonsense, and they can't even do half the crap we talked about today. They can't even work through harder times. They just blow their accounts and turn the stream off. It's pretty incredible, some of the things that we see on social media. It really is. Right? But yeah, so I hope you guys got value from today. Right? As always, thank you guys for your time. I want to make sure that I am aware of how much time has been taken. It's been 3 hours, and most of you guys have been here since the start, and I'm very grateful for the time that you guys have given me today. So yeah, let me look at the comments real quick. Just make sure I didn't forget. So why do you only stream 2 days alone? So the reason I only stream on YouTube 2 days is because the rest of the time I'm spending time with my private community. And I'm pretty obligated to that community. I'm obligated to pour a lot of time, as much as I can, into them because they have invested in me as their mentor. That doesn't take away from the importance I place on like my YouTube community and the free Discord community, and then those that follow me on Instagram. It's just, if someone's willing to financially invest in you, you kind of owe them, right? You kind of owe them a larger chunk of attention, I guess you could say. And I hope that's understandable. Maybe in the near future, I'll maybe slip in one more live call because I do value you guys and the time and attention you guys give me, because you can be anywhere on social media, but you're here with me. And I can't express how much I appreciate that, right? Because, there's so many opinions you could gravitate to. There's so many other channels that are bigger and more, probably more entertaining, or, whatever the case may be. Yet you're here getting the value and seeing the value in what it is that I provide. So I greatly appreciate that. And so as a result, I may end up in the near future, maybe in the next couple weeks, end up adding to the schedule here on YouTube, maybe Sunday live calls, right? And then, of course, maybe on Tuesdays, of course, as always, it's going to be the live call like it is today. And then I might add a Thursday because that lets some of the week pass, so that we can kind of review and find opportunities on that day as well. Maybe work in some Thursday reversals, how to navigate the ending portion of the week. Like today, we're learning and talking about how to navigate the start of the weekly range off of the analysis we did on Sunday. So I feel like incorporating a Thursday would be, kind of just completing the loop until we come back on, obviously, Sundays every time as well. Right? So how much is the group? So all the details for, anything else that I provide in terms of private group or anything else, all the details are definitely in the description below. And you just go look at those links, and it tells you, all the stuff that there is to offer when it comes to that community. So yeah, and of course, if you look through that and you have further questions, obviously you can DM me and we can have a conversation. But yeah, guys, we're about to hit 3 hours. So, with that being said, obviously study how beautifully this delivered. All the stuff that we went through in this range, our thought process, right? Some of the things that we talked about mentally and managing risk and how to deal with a losing trade and what your opinion should be after you take the loss. When we decided to make an adjustment, and how that delivered, what time it delivered. The macros are real. just saying, right? And so yeah, I think we covered a lot today. So I guess with that being said, you guys, thanks again for your time, and I will catch y'all on the next call we have here live, which will be either maybe I'll start this Thursday to have another call. Maybe I'll think about it, figure out what I can move around to make that possible. Otherwise, I'll see you all on Sunday, right? So if you have any questions, definitely let me know. Again, don't forget to like the video, share the video with your friends, subscribe if you haven't already, and I will catch y'all on the next one. God bless and be safe, okay?